Hi folks, welcome to the cryptocurrency course where we're going to be focusing on cryptocurrencies, Bitcoin, Litecoin, Ethereum, and all that kind of stuff that these days is getting a lot of buzz. People are asking questions about how to trade those things, so I decided to make this course so you guys can trade this equity or new technology safely. It's a very volatile kind of market, so it's important to know how to trade it, what to trade it, especially how to trade it correctly in terms of quantity and places to enter the trade and where to exit the trade. So this course is going to be focusing a little bit about the technology so we understand how things work and why we do what we do. And also, and more importantly, we're going to be focusing on the trading methodology. This is going to be a trading course, not an investment course. So if you're into investing into this technology, this probably is not the course for you. However, the methodology we use focuses on day trading and swing trading. Swing trading means holding the position for 2 days, from 2 days up to 10, 15, 20 days the most. And day trading, enter the position and exit the position within the day. So we're going to look at technical patterns, we're going to be looking at volume activity, we're going to be learning a little bit about candlestick charts and patterns, and also risk and money management, which is very important. Okay, so let's get started with the technology and then move into the trading part. Okay, let's get started. Udemy is asking for reviews a little bit too soon for my taste. When they do, I ask that you do leave a 5-star review. If you feel like that there is something missing, hold on until the end to get the whole picture. Anything less than 5 stars means there is something I can improve. So contact me first. I work to either solve or refund anything you are unsatisfied with. And if you're gonna rate it then, and understand how all the information is coming together, when your light bulb goes on and anything is going to make sense. And that's when you can rate it 5 stars. I try to put a lot of good stuff up front, but that's not always possible. Usually the rich stuff is in the back, once you get the whole picture, right? So like I said, all these aha moments are going to come out. With that being said, take a moment to read the risk disclaimer and let's get started. Blockchain technology. First of all, we need to have a basic understanding of the mechanism behind cryptocurrencies, and that mechanism is called blockchain technology. Blockchain is considered to be one of the greatest inventions of our digital age. Second only to the invention of the internet, which has the potential to revolutionize the way companies, universities, and other organizations conduct business and financial transactions. So what is exactly this blockchain? Blockchain is a digital ledger that publicly records all transactions in a sequential, secure, permanent, and ever-expanding chain of cryptographic hash-linked blocks. Well, what the heck was that? Well, let's break it down and see what all that means. So we got a digital ledger. Digital ledger is nothing more than a recorded digital file. And then we got the publicly records of all transactions. So this means that each financial transaction is basically publicly recorded and visible to everyone, which makes the whole process transparent, trustworthy, and reliable. And this is a sequential transaction, so the transactions are recorded in a chronological order. They are secure, meaning that they are stored securely. They're permanent. Once they are recorded, they cannot be changed. It's an ever-expanding chain. So it's forming a connected chain of transactions that continue to grow and expand. They have a cryptography in it. This is a highly sophisticated mathematical problem-solving method to hide, secure, and lock the information contained in this block. And then these hash-linked blocks, those are blocks of files linked to each other by highly advanced algorithms, hash-linked. So why is blockchain important? Blockchain is revolutionizing the method of transferring money using a decentralized peer-to-peer approach, meaning person to person. No banks, no institutions, no middlemen, just two people exchanging wealth. So instead of having a central bank or an institution acting as a third party to regulate and register all transactions, blockchain uses a global network of powerful computers to safely and securely verify, confirm, record, and store all transactions directly from person to person. So this decentralized digital process of transferring money makes every financial transaction more secure and less vulnerable to attacks, scams, and fraud. So if there are no banks, no institutions, no central authority, where do the money come from? Well, let's find it out. Mining. The process of creating cryptocurrencies is called mining. So mining. Since there is no central bank or institution that prints money, the way to generate cryptocurrencies is by providing services. So at the core of the crypto economy is the service of confirming, verifying, and securing every single crypto transaction. Those who provide those services are called miners. Miners are basically digital bookkeepers equipped with powerful computers whose job is to confirm, verify, and secure cryptocurrency transactions. So the process of mining consists of completing a very sophisticated and complex cryptographic puzzle. When puzzles are solved, that becomes the proof of work, and the cryptocurrency transaction is now created. When the transaction is completed, the first miner to solve the puzzle gets rewarded in fractions of the cryptocurrency transaction he or she has helped create. Hundreds of thousands of transactions are created every day. This process ensures continuation and proliferation of this crypto economy. One thing to keep in mind is that every time a miner creates a new transaction, the difficulties of the puzzle increases while the reward received at completion decreases. So basically, they do more work for less money. Countless of other services can be provided, such as freelance, advertisement, etc., where people, which are the service providers, choose to get rewarded in cryptocurrencies. And this is also an essential part of this crypto economy. Cryptocurrencies. The invention of blockchain and the introduction of Bitcoin, the world's most famous and currently the most expensive cryptocurrency, have paved the road for a revolutionary movement of cryptocurrency proliferation. There are currently more than 1,300 different cryptocurrencies available in today's market. By the way, anyone who has the right software and the knowledge can create their own cryptocurrency. So that number is only going to grow much larger. Bitcoin, Ethereum, Bitcoin Cash, Bitcoin Gold, Ripple, Dash, Litecoin, Cardano, Monero, Neon, EOS. Those are some of the most common and more heavily traded cryptocurrencies today. You can find a list of cryptocurrencies right here at coinmarket.com. Coinmarket.com. Check it out. As well as an interesting map that displays the genealogical tree of all currently available currencies. And you can access this map at mapofcoins.com. So what is a cryptocurrency? Well, a cryptocurrency is a digital asset that uses cryptography for security. Because of this security feature, a cryptocurrency is difficult to imitate and counterfeit. An attractive feature of cryptocurrencies is that there is no need for a bank to store them. In fact, they can be easily stored in what's called a wallet. We'll talk about wallets in the next lecture. And the most unique and attractive feature of cryptocurrencies is that any central bank, institution, or government does not issue it. So this feature makes cryptocurrency immune to government manipulation. However, bear in mind that cryptocurrencies are subject to manipulation from different establishments known as whales. Whales are individuals or groups of individuals that own a large percentage of coin volume. How do they do that? Well, just like institutions hold millions of shares and control their price actions, whales hold large volume of cryptocurrencies and control also and manipulate cryptocurrency price actions. So whales use a method known as rinse and repeat. Basically, they start selling below market value, which pushes price down sharply, causing people to panic and sell. Very typical. Then the whales are when the whales are satisfied with the price their cryptocurrencies have reached, they buy back at a lower price. By doing so, they are accumulating more coins volume and therefore are gaining more control over price action. You have probably experienced this if you've been watching the market, how these cryptocurrencies can skyrocket and then dive on a dime and then come back up again. So they're very volatile, and this is because of the work that the whales are doing underneath. They dump large amounts at undervalued price, and people panic, and then when they're happy, the whales, they buy back again. So there is a lot of manipulation going on with this particular equity right now. So it's very important to know where support and resistance are. So we're going to be talking about this as we get into the trading aspect of the course. Wallet. The right choice of a wallet is paramount to a safe cryptocurrency trading. Your wallet is, first of all, where you store your cryptocurrencies and the place you can send and receive cryptocurrency payments from. So what should you look for when searching for the right wallet for your needs? So we have online wallets, desktop wallets, paper wallets, hardware wallets, and mobile wallets. So first of all, online wallets. Online wallets are created and held on online accounts controlled by a third party. So you're given a private crypto key to access your wallet. They're very useful and convenient. However, the third party controls your private key, which makes this type of wallet subject to hacking and therefore vulnerable. Desktop wallets. So desktop wallets are created by the traded cryptocurrency itself, and they give you the privacy feature compared to, let's say, online wallets. So those wallets are downloaded and installed into your computer and accessible only on the computer where the wallet was downloaded. And then we got paper wallets. So paper wallets basically, it's the place where your key is registered and stored on a piece of paper. These types of wallets provide the highest security. And then we have hardware wallets, which is hardware wallets are stored on a user's private key on a hardware device, just like a USB. Since they're stored offline, hardware wallets are considered very secure. And then you got mobile wallets. Mobile wallets utilize an app on your phone or tablet. They're very useful as they can be utilized to purchase items at restaurants or retail stores or other venues where cryptocurrencies are accepted. Please look at this guide to help you find the best wallet solution for your needs. buybitcoinworldwide.com/wallets. Check it out. Cryptocurrency exchange. So the cryptocurrency exchange is the place where you can buy, sell, and exchange cryptocurrencies with other digital currencies as well as traditional ones like US dollars and euros. When selecting your cryptocurrency exchange, these are the things to look for: price, fees, security, and payments. Okay, so let's start with price. Well, cryptocurrency price varies from exchange to exchange. You need to look at the bid-ask spread, if there's such a thing. Sometimes they don't have a bid-ask spread. Sometimes there is no difference between the price asked to sell and to buy. The smaller is the spread, meaning the difference between the bid price and the ask price, the less you pay for buying, selling, or exchanging cryptocurrencies. On the other hand, the bigger is the difference between the bid and the ask price, the more you pay to buy, sell, or exchange your currency. Please look at this graph. This chart shows 9 major cryptocurrency exchanges: Bitfinex, Bitstamp, BTC, CX.io, Coinbase, Gemini, HitBTC, Hitbit, Kraken. What the chart shows is the bid-ask spread for each exchange. The spread changes constantly throughout the trading session. To make things a bit simpler to analyze, I'm using a weekly chart over a 6-month period. So you can easily see that Coinbase, Gemini, and Bitfinex have the smaller spread with a range between 0.006 and 0.040. Next in line we find Kraken, ITBit, BTC, and Bitstamp. Their bid-ask spread ranges from 0.080 to 0.130, higher. A bit more on the expensive side, we find CEX.io and HitBTC. Their spread ranges from 0.150 to 0.250. Please note that price is one factor to consider. Oftentimes, the price that the exchange charges is very low, but the fees for depositing or withdrawing your funds can be substantially high. So that's something to check as well. Check the fees. Okay, let's talk about fees. So while some cryptocurrency exchanges keep their prices low, and oftentimes also their trading fees low, they will charge you as much as 5% of your total investment when depositing or withdrawing funds. So be aware of these extra fees. They can really eat away at your profits and shrink your capital. Read the tiny prints before you sign up for any of those exchanges. Look out for the security. So we discussed security in the previous lecture where we talked about wallets. However, if you are parking your cryptocurrency on an exchange and not in your personal wallet, security is definitely an aspect that you need to research. Look for exchanges that have two-factor authentication and also cold storage. And then payments. Many exchanges only accept deposit via SEPA or wire transfer, which typically take 1 to 5 days, 1, 3, 5 days. So if you want to use your credit card, you will often be forced to sign up at the broker services. Okay, so this depends. If you don't mind transferring money from your bank account to those exchanges, just know that it's going to take a few days. That's usually the way it's preferred. Over the credit card, tricky, because then you are using your credit, and with trading, this is the most important piece in trading. Trade only what you can afford to lose. It's extra money, it's play money, okay? Don't trade money you're gonna need to pay for rent, food, bills, okay? That money, keep it. Don't trade that money. Don't run into trouble. I've seen people run into trouble because they took a loan from a bank and they start trading and lost money and then they have to pay the bank. It's crazy. So only invest, trade, risk the money you can afford to lose. Think of it as play money, okay? Even though when you trade as a business, but don't trade money you need to live on. Very important. Don't do it. And then within the exchange, look for availability. So exchanges might not be available in your country, so make sure that your country has this particular exchange where you want to be trading. To find the exchange that better fits your needs, visit cryptoradar.co. Okay, let's come here into TradingView. This is the platform I will be using for trading the cryptocurrencies. The exchange, it's limited. The availabilities of cryptocurrencies, it's limited. But I really like the platform. I really like the features that the trading platform offers, such as the possibility of seeing different type of charts, like candlestick charts, which is what I'm using, bar charts, if you like bar charts better, line charts. There's no point in analyzing the market because line charts tell you nothing other than the closing price, and that's not enough to make a correct analysis. And you can also add indicators, which is very important. Moving averages, money flow, volume activity. So those are the indicators we will be using. So when you are into the TradingView platform, click here, chart. So this is a chart that I had originally put together, where you have candlesticks, you have moving averages, and money flow and volume. So those are the key indicators. Okay, right now I'm using the free version of this TradingView. If you're going to be using this a little more often, I would suggest investing a little more into the Pro version that costs $10, Pro Plus that costs $20. And I don't think you need the premium that's $34 a month. The Pro, it's plenty. But if you don't use it as much, you see you get these ads popping up here and there. So that can be a distraction, especially when you're trading and if you're in the middle of something, closing a position, entering a position, and something is moving quickly. So I would suggest, if you like this platform and if you like the options, the trading options that this platform is offering, using the Pro. The Pro is $10 a month. That's a very small investment considering, and highly recommend it. So anyway, this is the chart I'm using. Right now we are into Ethereum and dollar. This is how you can set up. So let's make it from scratch. Let's start from scratch. So I'm going to remove all these things that I got right here. And I'm going to remove, come on, and the volume. All right. So this is the basic chart. How are we going to build on it? Well, let's add some indicators. So, well, first of all, I'm using candlestick charts. If you don't like candlestick charts, you use bars. Okay, that's what most traders prefer method of trading. They use bar charts. I use candlestick charts because they give me a much more clear idea of what's happening. And we're going to be talking about candlestick charts a little bit. For example, this tells me it's a hammer. Got a little reversal. Right here we have almost a bullish engulfing. So those are buy signal here, here. So if you know what you're looking at, candlestick charts can be very, very effective if you understand their methodology and if you understand what they're telling you. And I'll teach you a few things. I have an entire course that covers the 10 primary reversal candlestick patterns, and then an entire course about technical analysis. But right here, you're going to learn the basics so you can trade the cryptocurrencies effectively. I'll teach you some candlestick patterns, I'll teach you some consolidation and breakout patterns, and I'll teach you what to look for when those things occur. And so these are the candlestick charts, and then we're going to need to add indicators. So a very important indicator, volume. It is add down there, beautiful. So we got the volume in there. See, nice. And there's a moving average attached to that. I like to use for the moving average 25. Okay, that looks good. Now, going. Now, we're going to add other indicators. We'll need a moving average. Simple. That will be the 50. And exponential, that will be the 8. And then I also want to add a money flow. There it goes. Nice. Okay, so now we need to modify some of the values. The values here, very important. So the MA, simple day moving average, this will be the 50. Format, 50, close is fine. Style, this is fine. Blue, maybe a little brighter, easier to see. Good. And EMA, format, this I want orange. And the input, I wanted 8 EMA. Now currently I'm using the free version. So with the free version you can only add 3 moving averages. So we got the, 3 indicators. We got 2 moving averages and money flow. Volume, all of them, volume it's part of the chart. It's not considered an indicator. Moving forward, if I'm going to be needing a few more indicators, I will upgrade to the higher ones. Just maybe just for curiosity, see how that works. But I want to keep things simple, and I don't want you to put more money into a system that you don't really need. Okay, so we're gonna start simple with this free, and then if we need more stuff, we'll invest a little bit more, and I'll show you how. I'm gonna try it anyway later on, see how the things work. Because these ads popping up could be a distraction, and I don't want to be distracted when I'm trading. You know, you gotta be very focused, and you have to be calm. If those things are driving you crazy and they pop up a little too often, then get rid of them. Upgrade. Okay, so this is the charting. In the charting, let's see, you have the background. You can go dark. I don't recommend going dark. I don't like the dark feature simply because I find it very tiring on the eyes. The light template, it's way easier on the eyes. You can see the charts much easier. So that's my preference. When you trade, you're going to be looking at screens for quite some time, and you need to be kind on your eyes. Very important. So this is the chart we're going to be using. Another important thing I want to talk about is the options you have. So cryptocurrencies. Okay, so as you can see, TradingView uses a combination of those exchanges. You see, you got Bitstamp, Coinbase, Bittrex, Kraken. What else do we have? Poloniex. Yeah, so those are the main ones. Lot of Bittrex. So that's a very popular exchange these days. Okay? And the cryptocurrency options available, it's limited compared to the 1,300 cryptocurrencies you can find on other exchanges. With TradingView, you have fewer options. You have Bitcoin in dollars, you have Ripple in dollars, you have Ethereum in dollars, Litecoin in dollars. Bitcoin Cash in dollars and IOTA in dollars. So the options are limited. I don't like trading cryptocurrencies versus another cryptocurrency. I prefer using the cryptocurrency against a real, tangible currency. Dollar, euro, yen, depending on what your currency is. I'm in the US, I like dollars. So, but if you like trading a combination of cryptocurrencies, like, for example, Verge and Bitcoin, then, you know, that's fine. My preference is to use a cryptocurrency and a real currency. That limits my options, but in trading, fewer options are easier. When you have hundreds of currencies to choose from, you're going to get confused. You're going to be thinking, should I be trading this? Should I be trading that? Should I be trading the other? Very confusing to the mind. You got to focus. And if you have fewer options, you can focus your attention on 3, 4, 5, 6 different cryptocurrencies and get really good at that. Once you understand how a cryptocurrency works, or a stock, in this case cryptocurrencies, you're going to become a specialist of that particular cryptocurrency. You're going to understand how price behaves around a certain price level, how price behaves within a certain pattern configuration, such as a pennant or a triangle or a flag, how price behaves around certain price resistance, 5,000, 2,000, 1,000, 100, depending on which currency you're trading. So the more you work with one specific currency, the better you get at trading that. If you trade all kind of currencies. Yes, you might have more options, and yes, you have more excitements, I suppose. But to get really good at trading, focus on fewer. And TradingView gives us that option. The options of fewer to choose from. When you go into the other CoinMarketCap, now look at this thing. I mean, you got 1300 currently. Okay? So you can choose from all these different ones. But then, okay, so then you gotta click on this chart. Okay, so what this chart is telling you? It's telling you nothing. This chart is telling you that this Bitcoin has been going from 10, 100, what was it? Yeah, 1,000 up to 20,000, pull back to 10,000. I mean, it tells you nothing. You can simplify over here, go to the 3-month chart. Still tells you nothing. Those are line charts. Line charts tells you nothing. You need a charting tool that gives you as much information as possible. You need to be able to see the open, the close, the high, and the low of each bar. Whether you're looking at the daily chart, you're looking at 10-minute chart, you're looking at the hourly chart, 1-minute chart, or monthly chart. You need the information. You need as much information as possible of price, volume, and time. Those are the 3 key indicators you need. And if you open an account with one of the brokers and you sign up with one of the exchange we talked earlier, Bitstamp or Bittrex, make sure that their trading charts come with all these tools, candlesticks or bar charts with the open, close, high and low, volume indicators, moving averages, money flow or stochastics, or any of those other oscillators that you're going to be needing to trade this currency effectively, okay? I'm not using those exchanges, I'm using TradingView, so my options are limited, but I really like the trading platform. I really like the trading platform, and when you're trading technical analysis, the clarity of the chart and the information the chart gives you, it's essential for effective trading. Okay, so I've just upgraded the system to the Pro Plus 1995, simply because I wanted to get rid of those annoying ads that were popping up every 5-10 minutes. It wasn't a big deal, but you know, why having annoying things when you can just pay a little bit and have freedom to use the system freely. Anyway, and I also wanted to experiment by adding more moving averages. It's not required. 2 moving averages is plenty, but usually I have 4 or 5. So let's do that. If you can, add these 2 other moving averages. Come here. We are going to add the 24, the 21, and the 34. So the 21 EMA, right here, 21, we give a color of gray, and maybe darker. Okay, and we give 34 purple EMA. So the 34 is the exponential moving average, the 21 is the simple day moving average. Okay, so we have a few more lines right here. And moving averages are areas that help us identify areas of support and resistance. They act as magnets. So those are good things to have. We have the money flow. Money flow tells us when capitals are flowing in and out of the equity, the coin. And we get volume, very important. So these 3 indicators are essential. What are we going to do next? We're going to be adding a watch list. Okay, so let's now create a watch list. So you come here and your symbols will go right here. How do you add symbols here? Simple. You can right click on the chart of the particular coin. Right here we have the Bitcoin. And add Bitcoin to US dollar to the watch list. There it is. Next, let's see, what else do we want to add? We want to add Ripple. click, and Ripple to the watch list. There it is. Next. Litecoin. Excellent. Add. Next. Ethereum. This has all those lines because we've been drawing them earlier. You can hide them. Right click, add Ethereum. Next. Let's see how different this is. Okay, different exchange, oftentimes there is a different price. So you can browse around and check the difference, which one works best. Which one gives you the better range. What else can we add? Here. Lumen, let's see what this looks like. I tend not to like pennies kind of stuff, but since we don't have that many options within TradingView, let's add these as well. Click, add Lumen. Okay. Next, I'm looking for cryptocurrency and US dollar or euro or yen, depending on the currency you are trading. Litecoin, we already have that. Stellar, Bitcoin and euro, that could be an interesting one too. But I'm based in the US, so I like to use the US dollars. And okay, so we got Bitcoin Cash and a Redcoin dollar. Okay. Interesting. Okay, so let's use Redcoin dollar. Not familiar with this one. Oh, this is 0.02. Well, let's add them. Fewer options. Why not? You can always remove from the watch list if it doesn't work. And then Quantum 55. Okay, add to the watch list. And after that, Bitcoin Cash, do we have it? No. Yeah. Yes, it's a little better. Alright, add. Okay. Okay, that's good. So again, the options are not as many as in other platforms, but this is enough for us. Put this down. Don't need this noise. Headlines. Wow. Keep it like that. Okay. So what do we have? 1 minute. Let's change to the daily chart. This looks interesting. And then Ripple. This looks really powerful. Wow. Skyrocket, pull back, skyrocket, pull back, skyrocket, pull back, bigger pullback. Yeah, this seems ready to make bigger moves. Anyway, right now we're just looking at the options. Litecoin, this looks nice as well. Much bigger retracement. So with cryptocurrencies, this can be challenging because you got these major reversals and then a big pullback. So knowing what to trade and how to trade it and how price behaves for certain currencies is very, very important. And then you got this Lumen, seems to be in an uptrend. In Redcoin, this is also in an uptrend. Vatus, major crash from 240 down to 5, and now it's bouncing back. And is this Bitcoin Cash? Yes. 4-minute consolidation. Wow. From $200 now $3,000. 3,000, 4,000, and then now 2,000. I mean, come on. Crazy. Anyway, unbelievable. So, and if you don't wanna any of these cryptocurrency symbols right here, you can just click the X and they will remove your symbol. So you have fewer. And then click here and it goes away. So if you want to just trade Ethereum, there it is. We draw some lines here, I believe. Let's see, are they there? Yes, there they are. To the 15 minutes. Yes. That was the flag, pull back and break out. Beautiful. Okay, wonderful. And another options you have within TradingView, you can create alerts. Right now I don't have anything in mind particularly, but you can use the alert when, for example, price it's moving below one of these moving averages and you want to know when price moves above the moving average. So it crosses above, moves above. So you can click here to create an alert and you can say, so within this particular cryptocurrency, Ethereum and US dollar, crossing up, crossing down, greater, entering, exiting a channel, even channel is interesting. Moving up in percentage, lesser than, let's say crossing up, value, I want to cross up moving average, yep, only once per bar close, once per minute, once per bar close. And what do we want? We want to show a pop-up and a sound. You can then receive an email and text message, or just text message. And this will be the message you receive. Create. So we got the alert created. And so this basically will send us an alert when price will close above the moving average, right here. Right now it's above it, so we don't get any alert. But if price rolls down and closes below the moving average, and then a few bars later crosses above it again, bing, 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 we get the alert, we get an email, a text message, or whichever notification we selected. So this is the power of alerts. We'll let you know so you don't have to look at the chart all the time. You can just be looking at different charts, okay? Very, very important. I'll remove it because now I don't need this one. We got a social right here, so this is people talking about cryptocurrencies, forex, stocks. Basically those are chats if you want to connect with people sharing ideas, people doing similar things that you are doing. Usually when I trade I don't want this kind of distractions, so I don't care for that kind of stuff. Go away. Notifications, the alerts, and then trade. Buy, sell. This is an interesting, it's almost like a matrix. You can, so this, buy right there. Okay, interesting. Okay. Support. And then down here, you have some notifications with regards to economic events, stuff like that. So if this bothers you, you can come into the events right here and you can remove all these things. Show future event. Don't show anything. So you remove everything and you get nothing in there. No problem. If you like some of those events, there are dividends, plates, charts, economic events, only futures. Anyway, this is just an additional feature. Doesn't bother me right here. As long as I can see the volume, that's all I care for. Volume and price, of course. Okay, great. So, one last thing, we have these drawing tools. So when you draw this line, let's say this line is too thick, just simply change the width. Make it a little less, small, make it a little smaller. Yeah, I like it a little smaller, frankly. You can use a different color, gray, like gray. Maybe a little thicker, easier to see. Yeah. Let's see what are solutions we can give. Text color, line, depth, coordinate, visibility. No. Alerts. Now we don't need to create an alert. So this is the line. Okay. And let's save as. Okay. There it is. Okay. And let's see if we do another one. What happens? Same color. Nice. And what about the horizontal line? The horizontal line is still blue. I think I like blue. Yeah, blue is fine. Should we make it a little thinner? Maybe. Let's try this one. Yep, better. One more. That's decent too, actually. Doesn't take too much space. In fact, I'm gonna make those lines a little smaller. So let's make this one first the default. Template, save as blue. Okay, there it is. And let's make these smaller. And should we save it again? Save as. Gray. Okay, so that's the gray. So we got the gray and the blue. Can you see it? Purple. No. Blue. Gray and thicker. That's it. That's my line. Yeah, there it is. Okay, we're good. And this one actually I'm gonna make it thicker too. It just looks easier to see it. Yeah, way easier. Alright, great. Okay, so let's take a look at one of the indicators we are using, money flow. So money flow basically is an oscillator that tells us about the influx of capital towards an equity during a specific period of time. So this is a daily chart. Each bar indicates a day, the volume that's coming in the specific day. And the money flow is the influx of capitals. And when the line is inside of this purple area, this is considered a normal trading area. And we see when the line goes up and reaches into the above the 80, into the white section, this is what's called overbought. So there's been an influx of capitals and things are getting overbought, okay, like in here. And at that point, you should expect those that have gained quite so much to close their positions and take their profits. So that causes the overbought to roll down because there's selling coming in, roll down, and then we should expect the line of money flow to continue and move lower and reach below 20. At some point it's going to get there, and that's when it drops below 20, that becomes the oversold. So when the line crosses above 80, 70, 80, that's considered overbought, expect a pullback. When the line, green line, crosses down below 20, 30, 20, tells us that the equity has been oversold, expect a bounce off and a move up of the price, as well as the line. So it's one of those oscillators that tells us about overbought and oversold conditions, and also the influx of capital into that specific equity. Very useful, and I highly recommend using it. Other indicators we are using is a moving average. So we are using moving average, the simple day moving average, and exponential moving day average. They serve similar purposes. Basically, those moving averages are magnets that attract to them price. And we can use those lines as a gauge that tells us a price level. So for example, we're looking at the blue line. The blue line, it's the 50 simple day moving average, and it's the most watched moving average by the majority of money managers around the world, no matter the equity traded. So it's a widely recognized standard for an average price. So it's a very important line, indicator to utilize in your trading. So that's why we included the 50 in the chart. Another line that is very important is the orange line. This is called the ATMA, or trigger line. Basically, what that tells us is very important also, especially for swing traders. Stay in the trade until you see the price is closing above the ATMA. I'm looking at the closing price, and then close the position when price closes below the ATMA. Okay, so for example, in this picture right here, we are seeing price moving up, and even when it pulls back right here, price continues to close above the ATMA. So closing, pulls back below the ATMA, but then it bounces off. So it didn't close, stay in it. So you stay in the trade. Continues to close. Even down here, when it pulls back down, price bounces off and continues to close above the ATMA. Here, and then here, pull back. Now, if you are in this trade all the way, and you see this red candle, another red candle, so this is the indication that things are starting to pull back and going into bearish territory. But you see, up to this point, up to this candle, the price is still closing above the ATMA. On this day, however, it didn't. It opened below the ATMA, and by the end of the day, closed below it. So this is the indication that as this bar is forming and price start making lower lows, you see there is a low on this day, right there, and then price broke below the low and closed below the ATMA. So this would have been the indication. Close the position, wait until price returns above the ATMA and closes above the ATMA. And then pulls back all the way down to the 50. So this, then you could have used the 50 simple day moving average as a place to re-enter the trade. See, the 50 act as a magnet up to here, and it's still working as a support area. When price, if price moves below the 50 and closes below the 50, it's going to be very tricky. That's going to create a lot of sell-off, and it's going to cause a lot of panic in people that are holding these coins. You know, remember, this is a Bitcoin, okay? People bought this thing 3 or 4 years ago, $10, what was it, $20, $100? Okay, let's say $200. So let's say these people are sitting on $200 coin. They have one, okay? And they pay $200. And all of a sudden, that $200 is worth $14,000. So these people are not going to feel the pressure like people that most recently bought that same coin that these people paid $200. These most recent people paid $17,000, $19,000, $20,000. Imagine the pressure that these people are feeling. They see a little red candle, they see things pulling back. I mean, the people that pay $200 are sitting on it, and actually they're happy that they see price going down, because then they can buy more. Those are the wealth. Okay, so anyway, it is very important to pay attention to those lines, and the 50 is going to be a very crucial point when price reaches there and start closing below it. If price closes below it, it's going to trigger a cascade effect and a lot of sell-off. So that will be very profitable for those that know how to sell. And in this course, you will learn that as well. Anyway, so that's how we use moving averages. And then we have the others, the gray line, that's the 21 simple day moving average. And we have the purple line, that's the 34 EMA. Those, if you have the basic if you have a basic platform with TradingView or whichever broker you use and platform you use, if you can only use 2 moving averages, pick the 50 and the ATMA. If you can select more, 50, ATMA, 21 simple day moving average, gray line, and the 34 EMA, the purple line. And then finally volume. Volume is a very important indicator. This is part of our technical analysis. You have to analyze price, but also you have to analyze volume. If you have a breakout and you have no volume, that's a false breakout. Expect a reversal. If you have a breakout and you see volume coming in, you see these big bars. If it's a breakout and you want to buy, wait for those green candles to come in, big, 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 and then you jump in. I'm looking at the daily chart, but when you analyze the trade for entering positions and on a breakout, I'm looking at the hourly chart, 15-minute chart, and especially 1-minute chart. So we're going to be talking about that moving forward. Those are the indicators you need to have. Moving averages, volume indicators, and money flow. So when you trade, you have to know your trading strategy. Are you an investor? Are you a swing trader? Are you a day trader? The simple answer has to come from you. If you're holding a security, how comfortable are you holding that position overnight? If you're not comfortable, that means that you're better off day trading the security. How comfortable are you holding the position a couple of days? 5 days? 2, 3, 4, 5 days? Well, if your answer is, I'm quite comfortable with that, then you have more of a swing trade approach. Between 2 days and 12, 15 days, let's consider swing trading. Enter the position, hold it for between 2 days and 15 days, and then you're out. Ask yourself, how comfortable are you holding the position for 3, 4 months? In that case, that qualifies you more as a position trader. Between a month and a year, that's a position trader. And then you have investors. Investors are those that hold positions for 2, 3, 4, 5, 10 years, long term. So depending on your trading strategy, that's the kind of, and how comfortable you are holding positions for extended period of time, or stressed by holding position for short periods of time. Everybody's different. So as long as you know what rocks your boat, what makes you comfortable, trade that way. And sometimes, in my case, I'm generally a swing trader, but I also day trade. In fact, if there are opportunities that I can jump in and jump out the same day, make a couple of $100 in a day, sure, I'll take the opportunity. I like to hold positions for a few days. That's how you get bigger gains. But you're also putting up with the stress of holding positions overnight. You never know how things are going to roll in your favor or against you. So this is all part of the trading plan. Once you know what you'd like to trade and how you like to trade, then you can have a trading plan. Okay, this is very important. So day trading, hold positions for a few hours, in and out. Scalp trading, I didn't mention, this is very short, in and out, few pennies, in and out, few pennies, in and out, few pennies, in and out throughout the day. Crazy, but it can be profitable. And then you have swing trader, hold the position for between 2 days and 15 days. And then you have a position trader, which holds position between a month and a year. A month is 6 months, 1 is 6 months, month and a year, depends. And then you have investors who hold positions for longer periods, 2 years, 3 years, 10 years, 20 years. Okay, so I hope that brings some clarity and helps you understand what kind of trader you are, so you can make your own trading strategies and plans moving forward. Okay, so how are you gonna trade those? Well, you have to get comfortable with a particular currency, whether it's Ethereum, Litecoin, Bitcoin, or Ripple. Depends how much you want to invest. I'm not teaching people how to invest in cryptocurrency simply because I don't believe in this particular equity. I see it as a way to get in, get out, but that's also how I trade in the market. So my approach is, as a trader, is to enter the opportunity, ride the wave of the opportunity, exit when the opportunity is no longer there. I'm not looking to buy and hold for a long time. Okay, so this is a very important approach. You need to know what your strategy is. So this is our strategy. This is what I'm teaching you. How to trade for profit, get in, get out. So we will be looking at candlesticks, and we will be looking at consolidation patterns, and we will be looking at volume activity. So these three things are very important because they give us an idea of what's happening with that particular equity. So when you are looking at the chart, start by looking at the daily chart. Right here, 1 day. That's your daily chart. The daily chart gives you a view of the trend. When price is making higher highs, higher lows, higher highs, higher lows, that means price is in an uptrend. When price start making lower lows, lower highs, lower lows, that's in a downtrend. Now this is an uptrend and this is a pullback opportunity. So price has been moving up and now it's pulling back. So we're looking at the daily chart to identify the trend and identify the patterns of consolidation. So consolidation patterns is that after a trend, price will pull back in the opposite direction for a short period or longer. It could be a few days, few weeks, few months, okay? Like in this case, each bar indicates, displays 1 day. So here price went up and then pulled back for 1, 2, 3, 4 days. And then here on the 5th day, there was the reversal candle, a bullish engulfing, powerful. And this told us, okay, jump back in. This is the indication that price seems to be ready to move higher again. And it did. This is the daily chart. If you are a day trader, you start by looking at the hourly chart. In the hourly chart, you can identify patterns of consolidations and breakouts. And then you go a little more specific into the 15-minute chart or the 1-minute chart. So start with the hourly chart and then go down to the 15-minute chart and the 1-minute chart. The hourly chart gives you an overlook of what's going on within the day with a particular cryptocurrency. And then go a little more specific into the 15-minute chart and then the 1-minute chart. The 15-minute chart, you can still see the trend. Within the 1-minute chart, that's where you start seeing volume activities, big bars within the 1 minute. Look at this. The hourly tells us pullback. 15 minutes, pullback. 1 minute, pullback, but reversal with a big volume bar. With the 1-minute chart, then you can start really analyzing the market and pay attention to the bars that are appearing. In this course, I'm mainly going to be talking about day trading and swing trading, but mainly day trading. So we look at those trades, we enter and exit within the same day. So we're going to get comfortable by looking at 1-minute chart, 15-minute chart, 1-hour chart, and as always, the daily chart for pattern. If you are a swing trader, you look at the daily chart. If you are a position trader, you look at the daily chart. If you are an investor, you look at the weekly chart. Investors are not so concerned about volatility. They just stay in the trade unless there is a major reversal. And right here, there's no major reversal. You see, it's very clear. This thing keeps going higher and higher and higher. So they say, why worry until I see a big reversal candle? Well, this could be a big reversal candle. But price hasn't broken you see the ATMA, the orange line? Price is still holding above it. So that's a general guideline. As long as price stays above the ATMA, stay in the trade. When price closes below the ATMA, close the trade. Okay folks, a quick video to show you how to analyze the chart using intraday time frame. So this is the daily. Each bar indicates a day, and so that makes it kind of easy to identify the trend. This is the chart you want to use for trend identification. And then you want to switch into smaller time frame. Let's take a look at the hourly chart. And as one of you guys have brought up, it's a little more complicated to look at the hourly chart because it changes so quickly, or even smaller time frame, 15, 1 minute. So in TradingView, click on the wheel and you can add session breaks. So these will allow you to have a more clear view of where the day begins and where the day ends. Each of those vertical lines indicates the beginning and the end. So that gives you a more clear picture of where the day starts and where it ends. Also, in this case, for example, let's look at this trend. So right here, price is going up. We see, now we draw a trend line from here to here. We'll modify a little bit to match some of those lows. There it goes. Okay, so if you were watching this, get the lows here, the lows here, and the lows here, and then price right at this level is violating support, this trend line, and is moving below the moving averages, right at the closing of this day and at the opening of the following trading session. So this indicates the beginning of a downtrend. Breakout, volume is increasing, and every time price is bouncing up, it's met with some resistance, in this case the ATMA, and is making lower lows, lower highs, lower lows, lower highs. This is the indication of a downtrend. So the pattern we're looking right here, it's simply a rising channel and a breakout that comes right at the moving average and at the beginning of a trading day. So I hope that helps. Post a question in the discussion session if you need further help with that. Okay, thanks for watching. Support and resistance. The equation of demand and supply, the battle between bulls and bears, is what creates the market. When the bulls are in control, demand and consequentially price increases. When the bears are in control, supply and consequentially price decreases. What makes the price go up and down is the presence of large buying orders, more buyers than sellers. What makes the price go down is the presence of large selling orders, more sellers than buyers. When price moves sideways, there is equal strength between buyers and sellers. This sort of equilibrium between the bulls, the buyers, and the bears, the sellers, maintains the price within a specific trading range. When the bulls gain control over the bears, price will break out of the sideways trading range and will start moving up. On the other hand, when the bears gain control over the bulls, price will break out of the sideways trading range and will start moving down. When looking at charts, we are constantly looking at the interaction between bulls, the buyers, and bears, the sellers. When strong buying occurs around a specific price level, preventing the price from dropping even further, the price level is referred to as support. The support level is an area where buyers are expected to take control over price action. The logic behind support is that when the price drops down to a certain price level, it attracts interested buyers and discourages sellers from selling at a lower price. Support levels are generally located below current price levels. The line at the bottom represents support. When strong selling occurs around a specific price level, preventing the price from rising even further, that price level is referred to as resistance. The resistance level is an area where sellers are expected to take control over price action. The logic behind resistance is that when the price increases up to a certain level, sellers are more inclined to sell and cash in, and buyers are less interested in purchasing. Resistance levels are generally located above current price levels. The line at the top represents resistance. Usually, price trades near the support and resistance levels. Therefore, instead of thinking support and resistance levels, it is at times more appropriate to think support and resistance areas or zones. How to draw lines of support and resistance. Lateral lines of support and resistance can be drawn using any interval of time: 5-minute chart, 10-minute chart, hourly chart, daily, weekly, and monthly chart. The time frame to choose depends on whether you are a day trader, a swing trader, or an investor. Generally, daily charts and at times weekly and monthly charts are the most useful when looking at support and resistance. The first thing to do is to open up a chart using the daily time frame. When looking at the chart, go back and look at previous history: 6 months, 1 year, 2 years, 5 years. Then look at areas in the chart where the price has dropped, touched several areas, consolidated, and then either bounced back up or moved below it. Connect those areas by drawing an horizontal line across the chart. That lower line represents what we call support. Every time the price touched the support line and it bounced back up, the bulls were there to buy and push the price higher. Then look at areas in the chart where the price moved upwards, touched several times, consolidated, and then bounced back down or moved above it. Connect those upper areas of consolidation by drawing a horizontal line across the chart. That upper line represents what we call resistance. Every time the price touched the resistance line and it bounced back down, the bears were there to sell and push the price lower. Expand the chart to look at price action over the course of the past year or longer. Find other major areas of support and resistance. Come back to the 6-month or 3-month time frame and analyze the current price action in relation to those lines of support and resistance. How to draw trend lines. When looking at the chart below, we can see areas where price has been making higher lows. We can draw a diagonal line to connect those lower areas where price dropped and bounced back up. The diagonal line is called support trend line or lower trend line. Every time the price tries to move lower, buyers' support are there to push the price back up. When looking at the chart below, we can see areas where price has been making lower highs. We can draw a diagonal line to connect those upper areas where price reached and bounced back down. The diagonal line is called resistance trend line or descending trend line. Every time the price tries to move higher, sellers' resistance are there to push the price back down. As a general guideline, the longer a trend line is and the more times has been tested, the more relevant that trend line becomes. When the trend line is broken, it becomes a strong breakout signal. Trend channels. Trend lines are primarily classified as support trend lines, also known as lower trend lines, and resistance trend lines, also known as upper trend lines. Adding a parallel line to the existing trend line forms a trend channel. Trend channels are symmetrical pattern formations that clearly highlight investor sentiment of emotions and decision making. Trend channels can be divided in two categories: rising channels, falling channels. So you also have, look at this, with TradingView you have all these drawing tools. These are very important. You can draw trend lines. You can draw horizontal lines of support and resistance. You can copy the trend line. You can modify the pattern. You can find and easily see where there is an area of resistance, a descending trend line right through there, and then a breakout, and then price moving higher. Look at the breakout right here. Anyway, we're going to be talking about this with volume. Look how clear this is. First of all, let's get rid of that and this. Look how clear this image is. So you got a breakout right here at the resistance with a big bar, volume increasing, money flow going up. So this tells you three simple things. Get in. Get in. Look at the power of this bar. You enter at 10, 15, you enter at 1,000, 15, and you exit. Where do you exit? Well, it's very simple. You keep drawing the line. So if we have a bottom right here, okay, bottom, this makes a trend channel. I'm gonna get rid of this. I'm gonna make a trend channel right there. So this is the direction how this price is going. And then you're gonna find new areas of support and resistance. Okay, so there's some support right there. There. And there's a resistance right there. And now look at this. We're back about a few hours later. I just wanted to show you that technical analysis works. Okay, so we were right here. This was the resistance area that I draw, and we draw the channel. Here it is. So I say, where do you exit? Well, you gotta exit at resistance. Resistance is the top of the channel, right in there. Okay, so here we go. Look at this. Look at this candle breaking through the resistance. So this couldn't be the place to exit with volume. But volume is coming in. I mean, look at these bars. Bigger than the previous one. And we are not seeing any red bar, okay? So then, you know, you can stay in this trade until something pulls back. And the pullback could come anytime soon. So what do? You just change and go inside a different time frame. If you're looking at 1 hour, you can go back at the 15, at the 1 minute. Okay, so here we are back in the chart an hour later. And now, here comes the sell signal. So this is the indication that it is time to take some profit. This is going to pull back. And you can get a confirmation by going within the 15-minute time frame. And here it comes. Same signal, a little more specific. Things are consolidating, so this could go either way. Could pull back or break out. But since this is the nice run from 1080 all the way up to 1180, this is 100 points. If you bought one coin, this is $100. So take the profit because this has the potential for pulling back. Especially when you see this volume right here. See this red candle, big volume bar? This is a sell signal as well. Money stream pulling down, take the profit. So anyway, this is how you use technical analysis to place target, to find areas where price is going to go and bounce back off. It's going to pull back, test, and move up again, or break below it. So technical analysis is very powerful if you know what you're looking for, and I'm going to be teaching that, and you can use it effectively every single day when you trade your cryptocurrencies. Consolidation patterns. After a big price move, either to the upside or to the downside, price will tend to stabilize around a certain level. The average price of that particular equity will still fluctuate between highs and lows, but the trading range will be much smaller compared to the previous trading periods. Trading periods characterized by smaller trading range following a big price move are called consolidations. Consolidation periods are very important for traders because they are providing the opportunity to carefully analyze the market and gradually position themselves before price makes a bigger move. Consolidations are periods of rest in price action where there is some sort of equilibrium between the bulls and the bears. Consolidations also indicate indecision, and they can last anywhere between 1 day to several days, weeks, or even months. Consolidation areas are preludes to substantial price movements, breaking out of recent support and resistance barrier formations. After consolidation, at some point either the bulls or the bears are going to gain control over price action. When that happens, price is going to break out of the consolidation area. Price will move up if the bulls gain control, price will move down if the bears take charge of it. Generally, when the consolidation is over, price will resume its previous trend. If price was trending up prior to the consolidation, once price breaks out of the consolidation area, it will continue its upward movement. On the other hand, if price was trending down prior to the consolidation, once it breaks out of the consolidation area, it will continue its downward movement. The most commonly utilized consolidation patterns are triangles, wedges, flags, and pennants. Within each pattern, there are bullish and bearish configurations. For example, the bull flag and the falling wedge are consolidation with the potential of a bullish breakout pattern. Bear flags and rising wedges are consolidation patterns with the potential of bearish breakout patterns. Oftentimes, bearish breakouts are referred to as breakdown, and bullish breakouts are referred to as just breakouts. In this course, we are going to use the term bearish breakout and bullish breakout. Flags. After a steep price movement, also known as flag pull or simply pull, price consolidates and the trading range gets narrower. Within that trading range, price reaches highs and lows, touching areas of resistance and support. The flag pattern becomes very visible in the chart when we draw two parallel trend lines that touch the highs and the lows. The trend lines are literally barriers that stop price from rising or falling. When price increases, it reaches the upper trend line, the resistance, and fails to move above it, price will move back down. When price reaches the lower trend line, support, and fails to move below it, price will move back up again. The upper trend line should touch or come near to touching some of the highs within the trading range. The lower trend line should touch or come near to touching some of the lows within the same trading range. The upper trend line represents resistance and the lower trend line represents support. During the course of the flag formation, price will test support and resistance several times, and there should be a decrease in volume activity. The consolidation time for flag patterns is no longer than 4 weeks. If it lasts longer than that, we consider those formations trend channels, which could indicate a short or medium-term trend reversal. At times, the flag pattern will have a horizontal trajectory, which is what we call rectangle. More commonly, however, the flag will be slanted in the opposite direction of the primary trend. In other words, if price were in an uptrend, the slope of the flag will be a downtrend. This type of flag is called a bull flag. On the other hand, if price were in a downtrend, the slope of the flag would be an uptrend. This type of flag is called bear flag. Pennants. After a steep price movement, also known as flagpole or simply pole, price consolidates and the trading range gets narrower. Within that trading range, price reaches highs and lows, touching areas of resistance and support. The pennant pattern, sometimes referred to as coil, becomes very visible in the chart when we draw two similarly converging trend lines that touch, or come near to touch, the highs and the lows. The lower trend line should touch or come near to touch some of the lows within the trading range. The upper trend line should touch or come near to touching some of the highs within that trading range. The upper trend line represents resistance, the lower trend line represents support. During the course of the pennant formation, price will test support and resistance several times. The pennant pattern will have a sideways direction. Generally, when the pennant appears during an uptrend, it is called a bull pennant. When the pennant appears during a downtrend, it is called a bear pennant. The direction price is going to move depends on whether the breakout occurs above resistance, which will be bullish, or below support, which will be bearish. When price breaks out above resistance, we have a bullish breakout. When price breaks out below support, we have a bearish breakout. Triangles. In technical analysis, triangles are consolidation patterns resembling the same geometrical shape. When trading price consolidates around a specific level, and price fluctuation between highs and lows narrows with each passing interval of time, this indicates the formation of a triangle consolidation pattern. The triangle pattern is clearly visible in the chart when we draw two converging trend lines that touch the highs and the lows. The upper trend line should touch the highs of the consolidation area. The lower trend line should touch the lows of the same consolidation area. The upper trend line represents resistance and the lower trend line represents support. Every time price rises and drops inside the triangle, the trading range gets smaller and smaller. A characteristic of the triangle is that price will test support and resistance many times during the course of its formation. The consolidation time for triangles is no longer than 2 weeks. Candlestick charts. Traders and investors less commonly use candlestick charts because they are considered to be more complicated and cumbersome than bar charts. There are more than 150 candlestick signals and patterns showing a level of complexity and sophistication that most traders do not consider worth learning. However, candlestick charts are gaining popularity as educational material on the topic is becoming increasingly available. Education is power. Candlestick charts are similar to the bar charts as they both display the complete trading range by showing the 4 important price values: open, high, low, and close. In trading, the candlestick chart displays the 4 important price values of a specific time frame: 1 minute, 5 minutes, 10 minutes, 30 minutes, hourly, daily, weekly, or monthly. The main difference between bar chart and candlestick chart is in the body of the chart. After drawing the vertical line and the horizontal dashes to connect the high with the low and the open with the close, just like the bar chart, a box is formed. The box is called the body of the candle. If the closing price is higher than the opening price, the color of the candle is green. If the closing price is lower than the opening price, the color of the candle is red. The vertical line appearing above the body is called upper shadow. The vertical line appearing below the body is called lower shadow. The body and the shadows form what we call candlestick charts, or simply candles. The size and the color of the body and the length of the shadows are very important information regarding the current market direction, possible market reversals, and the strength of future price movements. Candlestick charts can be used as a tool to benefit from reversal and continuation patterns during uptrends, known as bullish markets, as well as during downtrends, known as bearish markets. We will discuss in greater detail the importance of such information in following lessons. Hammer. The hammer is essentially a dragonfly formation with a slightly bigger body. The hammer is formed when the opening price and the closing price occur near the same level. The vertical line represents the lowest trading price of that specific time frame. The hammer pattern is formed when the following two conditions are present. The length of the lower shadow must be at least twice the size of the body of the candle. The longer the shadow, the stronger the potential for a reversal. There is no upper shadow. That is a perfect hammer. However, if there is a very small upper shadow, the formation is still considered a hammer pattern. The upper shadow represents the highest trading price of that specific time frame. If the closing price is higher than the opening price, the color of the candle is green. If the closing price is lower than the opening price, the color of the candle is red. A red hammer has more bearish energy than a green hammer. A green hammer has more bullish energy than a red hammer. The color of the candle is not as important as the position where the hammer is located in the trend. When the hammer appears at the bottom of a downtrend or after a series of red candles and possibly in oversold conditions, this indicates that the reversal is about to occur. In this case, the hammer pattern is a bullish reversal. However, further bullish confirmation is required. If the next day the price opens above the previous day close and the bulls, the buyers, are taking the price up, this is the bullish confirmation that the reversal has occurred. It is time to buy or to go long. On the other hand, if the next day the price opens below or near the previous day close and the sellers, the bears, start taking the price down, this indicates that we are still in a downtrend. Be patient and wait for further bullish patterns to form. In this lesson, you're going to learn about the hammer as a bullish reversal pattern. In the following lesson, you will learn the hammer bearish counterpart, the hanging man. The hanging man. The bearish version of the hammer is called hanging man. The hanging man is formed when the opening price and the closing price occur near the same level. The vertical line represents the lowest trading price of that specific time frame. The hanging man has the same exact characteristics of the hammer. The length of the lower shadow must be at least twice the size of the body of the candle. The longer the shadow, the stronger the potential for a reversal. There is no upper shadow, that's a perfect hanging man. However, if there is a very small upper shadow, the formation is still considered a hanging man pattern. Here is the main difference between the hammer and the hanging man. The bullish version of the hammer appears at the bottom of a downtrend, whereas the hanging man, the bearish version of the hammer, appears at the top of an uptrend. If the closing price is higher than the opening price, the color of the candle is green. If the closing price is lower than the opening price, the color of the candle is red. A red hanging man has more bearish energy than a green hanging man. A green hanging man has more bullish energy than a red hanging man. The color of the candle is not as important as the position where the hammer and the hanging man are located in the trend. When the hanging man appears at the top of an uptrend, or after a series of green candles, and possibly in overbought conditions, this indicates that a reversal is about to occur. The hanging man is considered a bearish reversal pattern. However, further bearish confirmation is required. If the next day the price opens near or below the previous day close and the bears, the sellers, are taking the price down, this is the bearish confirmation that the reversal has occurred. It is time to sell or to go short. On the other hand, if the next day the price opens above or near the previous day's close, and the bulls, the buyers, start taking the price up, this indicates that you're still in an uptrend. Be patient and wait for further bearish patterns to form. Inverted hammer. The inverted hammer is essentially a gravestone doji formation with a slightly bigger body. The hammer is formed when the opening price and the closing price occur near the same level. The vertical line represents the highest trading price of that specific time frame. The conditions are the same as the hammer. The length of the upper shadow must be at least twice the size of the body of the candle. The longer the shadow, the stronger the potential for a reversal. There is no lower shadow. That is a perfect inverted hammer. However, if there is a very small lower shadow, the formation is still considered an inverted hammer pattern. The lower shadow represents the lowest trading price of that specific time frame. If the closing price is higher than the opening price, the color of the candle is green. If the closing price is lower than the opening price, the color of the candle is red. A red hammer has more bearish energy than a green hammer. A green hammer has more bullish energy than a red hammer. The color of the candle is not as important as the position where the inverted hammer is located in the trend. When the inverted hammer appears at the bottom of a downtrend, or after a series of red candles and possibly in oversold conditions, this indicates that a bullish reversal is about to occur. However, further bullish confirmation is required. If the next day the price opens above the previous day close and the bulls, the buyers, are taking the price up, this is the bullish confirmation that the reversal has occurred. It is time to buy or to go long. On the other hand, if the next day the price opens below or near the previous day close, and the bears, the sellers, start taking the price down, this indicates that we are still in a downtrend. Be patient and wait for further bullish patterns to form. When the inverted hammer appears at the top of an uptrend or after a series of green candles, and possibly in overbought conditions, this indicates that a bearish reversal is about to occur. However, further bearish confirmation is required. If the next day the price opens near or below the previous day close and the bears, the sellers, are taking the price down, this is the bearish confirmation that the reversal has occurred. It is time to sell or to go short. On the other hand, if the next day the price opens above or near the previous day close, and the bulls, the buyers, start taking the price up. This indicates that you're still in an uptrend. Be patient and wait for further bearish patterns to form. Bullish engulfing. The bullish engulfing pattern is formed at the bottom of a downtrend or after a series of red candles. The pattern is made of two candles. The first candle of the bullish engulfing pattern should be red, unless the first candle is a doji, in which case the color is irrelevant. The second candle should be green. The price of the second candle should open below the closing price of the first candle. The price of the second candle should close above the opening price of the first candle. Thus, the body of the second candle should completely engulf the body and possibly the shadows of the first candle. Please note that the shadows of the second candle are not taken into consideration. The bullish engulfing pattern shows that the bears are running out of steam on the day of the first candle, and the bulls are stepping in with greater strength on the day of the second candle. We should also see a volume increase on the day of the second candle. The bullish engulfing represents a complete change in investors' and traders' sentiment of emotions and decision-making. The bulls, the buyers, are now in control over price action, while the bears, the sellers, are stepping aside. When the bullish engulfing appears at the bottom of a downtrend or after a series of red candles and possibly in oversold conditions, this indicates that the bullish reversal is about to occur. Get ready to buy. However, further bullish confirmation is required. If the price opens above the previous day close of the tall green candle, this is the bullish confirmation that the reversal has occurred and that the bulls are stepping in with even greater strength. Time to buy or to go long. Bearish engulfing. The bearish engulfing pattern is formed at the top of an uptrend or after a series of green candles. The pattern is made of two candles. The first candle of the bearish engulfing pattern should be green, unless the first candle is a doji, in which case the color is irrelevant. The second candle should be red. The price of the second candle should open above the closing price of the first candle. The price of the second candle should close below the opening price of the first candle. Thus, the body of the second candle should completely engulf the body and possibly the shadows of the first candle. Please note that the shadows of the second candle are not taken into consideration. The bearish engulfing pattern shows that the bulls are running out of steam on the day of the first candle, and the bears are stepping in with greater strength on the day of the second candle. We should also see a volume increase on the day of the second candle. The bearish engulfing represents a complete change in investors' and traders' sentiment of emotions and decision-making. The bears, the sellers, are now in control over price action, while the bulls, the buyers, are stepping aside. When the bearish engulfing appears at the top of an uptrend or after a series of green candles and possibly in overbought conditions, this indicates that a bearish reversal is about to occur. Get ready to sell or to go short. However, further bearish confirmation is required. If the price opens below the previous day close of the tall red candle, this is the bearish confirmation that the reversal has occurred and that the bears are stepping in with even greater strength. Time to sell or to go short. Okay, let's go and start locate some patterns, consolidation patterns and candlestick patterns. Let's look for candlestick pattern first. Let's go back some time, see what we got down here. Take a closer look. Okay, I'm looking for some lower shadows. Let's see if I can find the hammer. We got one here, interesting hammer. Testing some of those moving averages. There's support right here at 670, the low on this day. Nice reversal, follow through. Let's see if we find this right here. It's a harami. We haven't studied that, but this is a nice reversal pattern as well. Bearish engulfing. Right there. This is almost a hammer, not quite, but looks like, except for this big, slightly longer shadow, it is a hammer because the lower shadow is longer, it's twice the size, more than twice the size than the body. So these do qualify as a hammer. And let's see, what else do we find? Long-legged hammer, very long. So the longer the leg, the longer the shadow, the more powerful is the reversal. Because this was at one point, this was all red all the way down here, testing those lows down here. But the bull stepped back in and brought the price up all the way to basically where it started. So the bulls had a lot of control over price action right here, and here look what happened. So the bigger the shadow, the stronger the reversal. And look at this massive reversal. He went from 1177 all the way up to 1700, 1800. And when did you sell? Up here, when the bullish engulfing appeared. This is a bullish engulfing. This is time to take profit. Period of consolidation. But this is such a powerful currency that this was just like a couple of days of taking profit. Price came back all the way down to 1600 and then moved above the moving average, the ATMA, and ready to go for another ride. Here we have an inverted hammer. Again, we have a little bit of a shadow, in this case below. Hammers should not have shadows, but currencies act a little different than stocks, so a little shadow is fine. And so this was sell, this was the sell signal, so the second run all the way up here. And when you start seeing the formation of this pattern, take the profit, close the position, and price retraced, came down to 1900, and then was ready to reverse again. So you had 3 days of a pullback. Another bearish engulfing, hammer, period of consolidation, price moving below the moving averages. So moving averages act as areas of resistance and support. When price touches the moving average and bounce up, like in this case, tells us that the bulls are there, the moving average is holding price up, is a support, and then expect price to move higher. It did here for some time. And the line I always look at is the orange line. The orange line is the ATMA, and the ATMA tells us about the short-term trend of the particular currency or equity. So as long as the price closes above the ATMA, stay long. When price closes below the ATMA, exit the position. And I'm looking at the daily chart. I'm not talking about intradays. Daily chart. And then you see here there's a crossover. The 50, the blue line, it's holding, 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 and then right here price closes below it. So this was the indication that if for some reason you were in this trade as a long, close the position because things are going to move lower. Or exit or enter a short position by selling the course, sell, by selling the currency, sell, yeah, and then price came down. Now this Bitcoin is very powerful, so we know the price went ballistic. So every pullback was an opportunity to re-enter. See? This is also a hammer, and followed by bullish engulfing. Beautiful. See, so those patterns will repeat. When you start recognizing the candlestick patterns, it's going to be easier to apply it to the chart. And then you use candlestick pattern, and you use moving averages. See, makes it easier to understand what's happening with market, the price, how to get in, how to get out. Okay? Okay, now let's go and look for areas of consolidation. So areas of consolidations are places where after price was moving in a specific trend, in this case uptrend, the consolidation causes price to stall either sideways or pull back. Like in this case, this is a pullback. So I'm going to take a closer look. Price is moving up and then it's pulling back. So the pullback in this case looks like a flag. Period of consolidation. Price is testing the lows, bouncing up. This can even go a little higher. There. Okay, so this is your flag. Price is moving up. It's pulling back. And then here comes the breakout. And then price moves higher. If price didn't break out here and move back down here, and then it broke down below, this was a breakdown. Bearish. In this case, bullish. Consolidation. Right here we are seeing a deeper consolidation, and let's draw some lines. So what kind of consolidation are we seeing here? Looks like we are looking at a triangle. Something like that. Touching some of those lows. Yeah. Price breaks above this line, bullish. If price breaks below this line, bearish. Right now, it's a consolidation. Let's see if there's something else. Go recognize. We got a pennant right here. Almost like an ascending triangle. Test, 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 and then the breakout right through there. Powerful. Okay. Confirming breakouts. When price breaks above resistance or below support and retests those levels, the breakout has occurred. However, we need additional information to confirm that the breakout is in fact in place and the price does keep moving in the direction of the breakout. Here is what we need to look for: multiple time frames and volume increase. Okay, so here we are in the Ethereum. I'm looking at the 1 hour chart, and this is very obvious that there is a pullback. What else are we looking for? A breakout. So after a pullback, you want to look for a breakout. Here it is. So we draw a line, trend line breakout, right there, matching the highs and the lows. There goes. Yes. So this is the breakout. This is the pullback, testing the top of the flag. So, sort of a flag. Yeah, it is a flag. False breakout. Down. And now this seems to be a real breakout. This is the hour chart. Every bar is 1 hour. Go back, test it, move up. But look at this. So the breakout comes. I want to show you what identifies this as a true breakout versus a false breakout. In the false breakout, so the breakout came, volume came, but then this bar didn't take it higher. It moved back inside the flag. So this was the indication that the breakout was not coming. And also we don't see volume. After a breakout, you want to see volume coming in, like big bars. Didn't. So price came down inside the flag, up and down, moving lower. And then here, this is the breakout we're looking at. There's volume. Now, didn't quite give us the energy we were looking for. Pull back, 3, 4, 5 hours later, tested the top of the flag, and then printed a hammer on the hourly chart, and then a bullish engulfing. So these two together, it's the indication that the breakout is happening. Price is moving above the ATMA, volume is coming in, and there, more volume, see? Then once you find this breakout right here, you want to go inside the, let's see, the 1 minute chart. Let's look, see what that looks like. Sometimes the currency doesn't trade enough. So this is the flag we were looking at. See, price broke above it, pulled back down, tested, rolled over, tested the top of the flag, and then moved up. So this is the 1 minute chart. You see this currency doesn't trade a lot. Volume bars, not that big. So this was the breakout. Came with volume, right there. Pulled back a few times, moved sideways, and then came down, tested, and then moved up. But here is the key piece. The top of the flag held, and price moved above the moving averages, and then shoot up. This was the consolidation, right through here. We can draw some trend line. And we can draw also a support trend line. Okay, so this is bottom of the channel. Okay, and then you make it top of the channel. So we have the price popping down for just a split second and then back up again. So this could have taken out people. But then here price returns above the support, right here. And then what happened? Volume coming in. Look at the volume coming in right here. Look at this big bar right here. So this would have been a place to jump in. And price ran from 1220 up to 1270, go back, 1280, and then reversed. And then you could have taken your profit, you could have closed the position here when price violated the bottom of the channel. See, right here. But this was the place to enter. So you see price come down, test the top of this flag right here. See, this was obvious. And then price moved above the moving average, all of them, and moved up. Beautiful. Consolidated, pulled back a little bit, but was right up above the support, and then run again with volume. This was the key piece. Now let's look at, because this currency doesn't trade a lot, we see a lot of horizontal movement. This is just like not trading. So let's look at the 50-minute chart. Same segment. Okay, so this is the flag. Then we looked at the hourly chart and the 1 minute chart, and it's the same at the 15-minute chart, same area. And then right here at the top, price comes down, and look at this. Tests top of the flag as well as the 50 simple day moving average. So this would have been a place to enter the position. The 50 held, top of the flag held, money flow started to go up, very good, and then volume is coming in. See many green bars down here, volume bars coming up, a big volume spike, beautiful. And then price consolidated. So when you look at the 15-minute chart, look at the orange line, that's the ATMA. As long as price remains above the ATMA, stay in the trade. This is a breakout with volume. See this bar right here? Previous one were fine, but this especially. This is the volume that tells us jump in, right there. Yes, this pullback came down a little bit, tested the moving averages, but price was right above it, and the volume wasn't huge. And then more volume is coming in. See, this is the excitement. 1, 2, 3. Look at this third bar. Pull back, and then you start seeing some red down bar, volume bar, and money flow is into oversold, starting to move down. So here is where you close the position. If you're not sure, wait for the moving average. So it's the ATMA holding. You can stay in the position and as long as price closes above the ATMA. As soon as it closes below it, close the position. Or as soon as price violates the support, this is your support right here, violates right there, close the position. Okay? This is the 15-minute chart. So this would have been a run from 1170, let's say you enter here, 1196, all the way up to 1283. Also, another way to know where to exit the trade, as we mentioned before, look for areas of resistance and support. So you gotta pull back the chart and you draw an horizontal line, looking at previous highs and lows. So we see some highs and lows around here. Yeah, so this would have been a place, and then this would have been another place. I'm looking at the high right here, and this would have been another place. So if price had continued higher, which it might, we don't know quite yet, those were the next target. If this channel wasn't violated, the support wasn't violated, price would have continued the 45-degree angle all the way up to 1336 and 1362. So you stay in the trade as long as support holds. Support fails, and then you have down bars and money flow is moving down, then you close the position. You see right here, volume is increasing, this is all selling. So here we go, a follow-up from yesterday. Here is where we took the trade, or showed you the trade, the pullback. This was the place to exit, pull back. And look at this, price test at the top of the channel. So this was a place of support. And after you saw the formation of this green candle is a Arami pattern, it's a candlestick pattern, it's a buy signal, followed by a positive opening, moved up. So this came as a breakout here. See, it's a little breakout right there. Nice. With, let's see, not a lot of volume, but was decent enough to give enough momentum to make another run. So this was 100 point pullback, and then this one ran from 11:43 to 11:26. So it's almost another 100 points. So after you have a run like this and a pullback, the second run should be of the same dimension, and then we see a double top here and here, and price retrace, pull back up. At this level there is clearly an obvious resistance, which we'll mark it for later. So this is a strong resistance, and what did price do? Wasn't able to break above it, pull back. And usually when you have this double top, go short. This is a place to sell the currency. And the coin came down, tested the 50, the blue line, and then tested the top of the trend channel, failed. And look what it did. Came down, came up, tested. This is a back kiss, consolidated around this other area of resistance. Resistance and support. You see, I'm looking at the lows right here. Those lows were support, and then here they became resistance. See, pull up, was able to break through. It did for a brief moment, and then it just fell to hold, and then came to the next support right there, fell and continued to fall. Look at volume increasing. The red bars, this is down bar, this is sell, 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 panic. People are panicking, look at this. Until this candle, the hammer. Yes, look at this hammer candle. We talked about this. And followed by a bullish engulfing. Big, beautiful green candle that embraced this one. So you have panicking, people selling at the bottom, 950. Pull back, you don't have to buy 950. You can buy after you see the formation of a hammer. Look at this, formation of a hammer, followed by a green candle. This is a bullish signal right here. You see price opening right here and moving up. So once price reaches, I'm looking at the high on this day, above the high, 1032, get on board again. Because this is support, price came all the way down to the next support, which is here. And the energy of the bulls were there, because it came from 950 all the way up to 1030 and continue higher. Price moved above the ATMA, that's always a good indication, reached this area of resistance, broke above it, reached the channel, it moved inside the channel, flirted with the bottom of the channel a little bit, a few times, and now it continues to move higher. So where this price will go? Well, right now it's inside the channel, so you can do the same thing we did before. Buy a support, sell a resistance. Now price is up here at resistance and it's testing the support right here. So this could be moving higher. If this area holds, this is a strong support. It worked here, it could be working here too. Broke above, pull back, volume. So let's see, volume is decent. This could be a place to enter. I'm not seeing a lot of excitement, but it's steady. You see, you got this little tiny channel going. Something like that. Bottom of the channel and the top of the channel. Something like that. So, as long as the price remains above support, this blue line and this purple trend line, you're good to go. And you can set a stop below here. So if price moves below 1140, you're out. If price continue higher, you know there is resistance right here, this line right here, and then there's going to be some resistance up here as well when price, if price reaches the top of the channel. And if price with volume is able to break above it, then we have a much bigger resistance, which is up here. Now the thing that is concerning me about this one is the price has already run from 950 all the way up to 1175. So this could be an exhaustion move, especially with money flow rolling down. See this movement right here? So this will concern me a little bit. But listen, as long as you place your stop losses, keep your stop losses in place, you're taking trading is risking. You risk a capital. You risk 1 to make 4. That is a good risk-reward ratio. So anyway, we'll see what happens with this one. Like I said, I'm not feeling super confident about this particular pattern. I can also go inside the 1-minute chart and see what's happening there. Okay, so steady, big pullback. Yeah, I would probably wait for this one. I would want to see a much stronger pattern. Yeah, right now I will not enter this particular trade. So let's see what happens moving forward. And if price moves up, you can always jump on board, and if price moves down, you can either close the position or go short. As long as you know you have a plan and you follow the plan, you're good to go. As long as the positions you're using are small, you don't get too greedy, you don't get too excited, because then excitement follows fear. If price moves against your prediction, you're gonna panic, just like happened here. Look at this, price ran from 1200 down to 900, 950. That's scary. Now you see, red candle, something coming in, some sell. Let's look inside the 1 minute. Okay, yeah, moving down a little bit. The 50, the simple 50 simple moving average, it's acting as a resistance. The 80 MA, it's acting as a resistance. Now let's watch for a moment, see what price does, and see if bounces off the support right here. If it bounces off the support right here, this could be an entry opportunity. You just need to see and wait. If I were to trade this, I will probably not trade it. I will move on to a different coin that has a more clear pattern. This right now, it's at the bottom, at the top of an exhaustion move, so I'm feeling a little uncomfortable. But let's see what happens. There's nothing wrong by watching. Green candle, money stream moving up a little bit, but this is not enough. You see, this is like a bearish flag. Go back, so retracement, pull back up, a bearish flag, and now we could see a second wave like this, wave 1, wave 2, wave 3, down to these two supports, and potentially down to this level right here. We shall see. I'm going to place a line of support. There. This fell, price will come down here. Or maybe here. Between 11.17 and 11.23. See what happens. Money flow continues to move down. You see what happened here? Money flow came down, came into oversold condition. There was a little bit of a reversal here. But the reversal wasn't that strong. Price went all the way up to oversold, to overbought. And price didn't move quite much. It was, what was it, 10 points? So this is still bearish. We're going to see this move much lower. Yeah, pretty soon we'll be testing key support. This is one. The next one is right here. This is key support, 1144, 1142. Support is holding for now. We'll see, this is not in oversold condition yet. Volume is steady, no big spikes, so we'll see. If we get a big green candle, might be the opportunity to jump on board. If we see a big red candle coming in, then that's the opportunity to sell. $144 down to 117, 1117. That's 80 points. So that's something that is worth selling. The problem here, well, we're still inside the channel, so there's not really a problem. If this fell, it will come down here, then get bounced, and it will move up there again. Yeah. Again, this is not the pattern I would like to trade, frankly, but it's worth watching what's happening. Okay, so slightly bigger buy volume compared to the previous ones, but didn't get a follow through. So you got smaller bars. Take a look at the volume. What's happening? Turning red and now green. See, this is indecisive. We are at support, so this is important. This could be a double bottom, especially if price holds here and here. Still moving sideways. Volume picking up slightly, but not really. Money stream is moving up, price is not. So money is flowing in, but it could be for the opposite direction. Candle finished and it was red. So this is a down bar. This is sell. So whoever bought here, same amount, sold here. Same exact amount. Yeah, I think this is gonna go lower. So if you were to trade this, if price breaks below here, then you have a descending trend channel right through there. So this can go either way. There. And right there. See, selling, selling. Okay, so we got a big volume bar right here, but price didn't go anywhere. So it looks like more selling is coming in. Money stream is moving up. Once it reaches up here the overbought conditions, yeah, this looks like a selling. So if it breaks above this descending trend line, the flag, this is a flag. If it breaks above here, it's a buy. If it breaks below here, this bottom of the channel, price will come down to test the bottom of this flag. See? And look at the red bars coming in. There it goes. Breakdown. More bars coming in. So this will be a sell. This is a place where I will sell. And look at that, coming down. Coming down. Look at that. Volume coming in. Where would you exit? Well, somewhere down here at the bottom of this channel. 127. Let's see, there is a little support here. I don't think it's going to be enough. But you never know. Could be enough. So this is a little bit of a bounce here. Could get it. But if this fails, price could come all the way down here to 120.27, and then potentially I'm shooting for 117, 11.17. Let's see. Moving lower. See this volume right here? This is sell. We got the signal right here. Buy on a breakout to the upside, sell on a breakdown. Price breaking down below support, sell. Let the wave run. See how far down this can go. Because it's inside what's called a flag, it might not run a lot, but you know, it goes from, let's see, 142 to 122, that's 20 points. And if you have one coin, that's $20. Okay, that's not a lot. If you have 10 coins, that's $200. Okay, we got a bounce. Not a lot of volume. So this could be, there is a little support right here. This could be something like that. And then followed by a red candle, and then a little bit more pullback. Volume is coming in a little bit more, but not as much. Now remember, price now is below support. So now this line right here and this line right here, those are resistances, big resistances, and there is a resistance right here too. So this has more probabilities that we'll reach one of those resistance, and if it fails, especially with the down bar volume, this will come down and test the bottom of the channel. Again, this is a consolidation, so during the consolidation, you know, you just get in position for a bigger move to happen. So during the consolidation, you're going to be waiting for a long time for some kind of movement. That's why I said I will be moving into something else, something more productive. You see now it moves lower, below this support, lower. Big red bar. Where are we going? Like I said, 127 and then 117. See if he gets there. There he goes. Bottom of the channel. So here you could take your profit, sell. Because here, if it's still a consolidation, it will pull back and bounce back up. But if we get more volume coming in, this could really break down and come all the way down here to 117. But the chances here, because it's a consolidation, it will get a bounce. So we'll see. We'll see how strong this support here is. Yeah. Yep, not that strong, so continues to move lower. More volume coming in. Now it's kissing the back of the flag. And now it's coming. Next will be 11.17. Testing, testing. More sell volume coming in. Look at that. Money stream is coming into the oversold condition. So this could give us a bounce. And there's the bounce. And now you get more green bar here. See the volume? Oh, just change. Okay, so more green bar. Indecision. Trying to break lower. Well, how far low could it go? Well, 117, 11.17. This is the next support. Line here, and the line there, and the line there. See, this is a strong support. This is the next logical target. If the bottom of the flag fails, you see that broke down. Look at this. Now this support is breaking lower, and more volume is coming in. And there it goes. The bottom of the flag did not hold, and it's breaking lower. The next target, down here. 1100. Look at this volume right here. Big volume bar. Somebody's freaking out. And so if you were short in this position, if you were selling this coin, sell into the fear. When you see this big down bar and prices reached an area of support in this case, close the position, take the profit. So this, because the bottom of the flag fell, it could really collapse. Price could really collapse and come down 1100 and then bottom of the channel. Let's take a better look. And this bottom of the channel, this is a major support. This total needs to hold. But before it gets there, we'll see. Let's see if we get a bounce. So now, what do we have? There's a little support right here. Okay, price is moving above 11.18. Let's see if he holds. This is a strong resistance now. And chances are he won't. But let's see what volume does. Volume is coming in, buying volume is coming in. You got this resistance, the ATMA, and this resistance, the bottom of the channel, the bottom of the flag. Two resistances. See the ATMA, the orange line is holding price down, and this blue line right here, it's holding price up. So price is caught in between these two areas, which is what usually does, support and resistance. Now we got some support right here, so price is testing the support. This candle right here, that's the support that is holding things up. There. So if this holds, and you got more volume coming in, then price could move inside the flag again. But doesn't seem like it's interested. This looks like wants to get lower. Okay, we got a bounce. Bounce came. Now let's see if the bottom of the channel holds price down or if we get a reversal. So now we have 11.19 support holding. This is good. Volume, not much coming in, but it's okay. Now the important thing is that price needs to move back inside the flag. Seems like it's trying. Yeah, looks like things are looking much better. This can probably hold. Anyway, this trade is done. If we sold here and bought it back here, this was a run from 140 to 127. That's 13 cents. That's 13 points, not much. But if you held further down to this support, that's 17, 11, 17, that would be 23 points. Hi folks, so in this video I just want to briefly talk about the different strategy you can utilize when trading. So there are two main strategies. One, it's called going long, which means entering a trade. Basically, this is the most common strategy where people buy in equity, in this case cryptocurrencies. And then they will sell at some point when price reaches their target or when they got stopped out. The other strategy, which is less common but very profitable if you do it correctly, and very useful within currencies, whether you're trading forex or cryptocurrencies in this case, and even stocks, but this is a cryptocurrency course, so it's a very useful strategy you can utilize to sell cryptocurrencies. And what that means is that basically you can sell a specific cryptocurrency when price is at a resistance or at some level that you feel like is going to go lower. And when you do that, when you press that sell order, which is called going short, you're basically borrowing cryptocurrencies or other equities, in this case again cryptocurrencies, from your broker. So you take these cryptocurrencies and your prediction is that price is going to go down. And as price goes down, because you're short selling, you're making money. So when people are caught in the frenzied buying, but price starts going down, that's when you short sell. So it's a very effective technique to use, and then you buy to cover when price reaches the support and you're happy with the price that has reached. Okay, so when we talk about risk and reward, it all has to do with your comfort, how much money you want to allocate into the specific trade, the position size, and the kind of trading you're doing. Right here, mainly we're talking about day trading currencies, so that's what we will be referring to. But overall, the correct risk-reward ratio when trading is 1 to 4. What that means is you want to risk $1 to make $4. $3, $4, $5, at least $3, $4. So if you are in this particular currency, Bitcoin and dollar, so we are seeing the price seems to have found the base. Now we're looking at the hourly chart simply because it's easier to see. This is something you want to be doing. You want to analyze different charts. So you start with the daily chart to see the pattern, and then you go into the hourly chart to see if you find some consolidation happening, some reversal. Like in this case, we are seeing a reversal here and here. So this is a double bottom, means price is ready to bounce up, and it did. Okay, so we are looking at this area and a downtrend and a breakout right through here. See this black line right here? Price bounced down a support at 5,600 and reverse, moved through the moving averages, pushed through the resistance. This was a key resistance trend line. I don't have the whole chart, but going back was many days of a pullback and then a breakout. a bounce and a breakout. So at the breakout, here is where you want to consider entering a trade, especially since the 50 simple day moving average is holding, price is coming through with volume. This is one of the volumes. Obviously, you want to go inside the 1 minute chart to see the volume that we're talking about. This just makes it easier to see the pattern of consolidation and the areas you want to enter, exit, and calculate the risk and reward. So you enter here at the breakout and you exit somewhere at the resistance. So there is resistance up here. We see this area right here. Okay, so that's the resistance. So this is a place to exit. And then price consolidate. So let's say you miss this run. You wait for the consolidation. We see price forming this pennant. Okay, everything blinked. All right. So we're seeing this pennant. And this is a place to enter after the breakout. Okay, so now you are waiting for price to break out of the pennant. Here it comes. This is the hour where the breakout occurs with volume. This is the key piece. Pennant formation. Price breaks out of the top of the channel, top of the pennant, and here is the candle. So you can enter anytime during this candle formation. There's volume coming in. So you go inside the 1 minute chart, you see the volume bar popping out of the breakout. And then you go back into the hourly chart. This is 60, that means 60 minutes, that's hourly. So the hourly chart, here it is the breakout. So you should expect a follow-through movement. And then what is the risk and reward? So we said risk reward 1:4 ratio. Okay, so if you're entering at this level, for simplicity, let's call it 6,700. So you enter at 6,700 and you want to risk 1 to make 4. So again, for simplicity, you want to risk $100 to make $400, okay? So if you are entering at 6,700, you wouldn't want price to come down further than $100. So you have $6,800 worth of a coin. I'm just keeping things as simple as possible, even numbers. So you bought at 6,700, one coin, and you don't want to risk more than $100, so it's 1 ratio. You want to risk $100 to make 400, okay? So if you enter at 6,700, you want to place the stop loss somewhere around 6,600, but you don't want to make that a random choice. You want that stop loss to coincide with a support area, below the support area. So you want to find the support area. So look at the chart and find the support area. In this case, it's the top of this pennant, right through here, at the top of the pennant. So that's support. Price, you don't want price to come back down and go below it, okay? So if you calculate, that area comes around 6,600. Look at the area where you entered and look how far down is the support. So if your support is 1 point lower, your reward needs to be 4 points higher. In other words, you're taking a risk of 1 to make 4. In this case, you risk 100 to make 400. So if you're risking 100, you enter at 67, stop loss is 66, target at 7,100. If your support is, in this case, $100, or the ratio 1:4, if your support is 1 point lower and your reward is 4 points higher, that's a good risk-reward ratio. If your support or price could pull back and you get stopped out, it's at 1. And your reward is 1, don't do it. That's not a good risk-reward ratio. Don't risk 1 to make 1. Don't risk 2 to make 1. Risk 1 to make 4, 5, 10. Okay, so let's look at this consolidation pattern. If this is a breakout, I want price to remain above the breakout. I don't want price to re-enter the breakout, because that would be a false breakout, which could trigger a fall down effect and price could come down here. And where will the stop be? So if this doesn't work, you have to calculate. So if price reverses, I'm willing to lose 1 to make 4. Okay, so 1 can be $100, $200, $500, depending on your position size. So I would say, okay, price could come back and test the top of the pennant. That's possible. Or test some of those highs here. That's doable. That would be 1600. Again, I'm talking in terms of simplicity of numbers. So they would be risking $1 or $100 if I enter one coin, one position. And I see some lows down here. I don't want certainly price to return down here, but it is possible the price could test some of this low down here. Again, they will dismiss my breakout theory because price is returning inside the consolidation area. So, but for simplicity, let's say we set our stop loss at 6,600, right through here. So if price comes down slightly below and touches the top of the channel and comes a little further down, we are out because then that didn't work. Okay, so we're risking 100 to make 400. So 400 should be 700, somewhere up here. Is it possible? Well, usually targets are calculated in this way. You measure a previous movement the price has made. Here we go. This price came from 57.40 down here all the way up to 6,600. So let's call it, again for simplicity, from 5,600 to 6,600. So that's 1,000. Price moved $1,000 right here in the course of several hours. Consolidated. So if price made 1,000 point move, we should expect this movement to be something similar. Okay, so in that case, if I'm thinking, all right, if I risk $100 right here, to make $1,000, well, that's worth way more than a risk-reward ratio. So yes, that would be a very good risk-reward ratio. That's actually 1 to 10. Now, we don't want to get too greedy, so we want to keep it between the 1 to 4. Okay, 1 to 4, 1 to 3.5, 1 to 4, 1 to 5. Okay, so we're risking 100 to make 400, 500. Okay, so somewhere around the 7,000, 7,100 support resistance area. You also want to go back in time and look if there is a resistance, an obvious resistance back in time, last month, 2 months ago, so you know where the resistance is, and usually at resistance price will bounce back down, so take profit at resistance. Okay, so we enter the trade, we set the stop loss to be triggered if price moves below 6,600, and we let price run, so we set the target at 7,100 because we enter at 6,700 and we want our target to be $400 above it, 1 to 4 ratio, so that's 7,000. Okay, so now what's going to happen after? Okay, so here is the movement that price did. So this is the 1,000 point move. Here we have, so from 66 to not that much, stopped here, consolidated, but this, you see, this reached our target. Once price broke out, had a follow-through, volume continued coming in, and then a little bit of consolidation, which we see right here with volume decreasing, and then more volume. As more volume is coming in, price is moving higher, and then we get some more consolidation. But you see, price is not making lower lows, it's moving sideways. So this would have been another place that you take profit when price reached 700, 7,100, and then on one of the pullback you closed. Now as price moves higher and reaches your target, keep raising your stop loss. Previous lows, keep raising your stop loss. And then price reaches the target, close the position and be happy with that. Don't continue re-enter the position. Okay? This is very important. This is one of the issues that most traders learn the hard way. They overtrade, so they make 100 and they lose 200 on the same day. They get so excited, they make 300 and then they lose 600 2 days later. So that's how we eat away at the capitals. Yes, that's very important thing to understand. Don't overtrade. You make a profit, be happy with that. Walk away, go for a walk, enjoy life. Take your car for a drive, take your dog for a walk, take a break, walk away from the computer. Come back to work when you're ready and then look for another buy opportunity. You don't want to overtrade it. How much money do you need? If you go and have a day job, how much money are you making? $100 a day, $200 a day, $500 a day? So whatever you need, try to make it in your work pay by doing this, but don't overdo it, because then it's like you're overspending. So very important, don't overtrade. Key piece, okay? So we reached the target at 700, very nice, beautiful, happy with that, walk away. Now, for the sake of this exercise, price continue to move higher, so if you are still in this trade, you can also look at the pattern. You see there is, you can connect the high over here with the high over here with the high over here, you draw a line, so this will make a channel, and then you copy the top of the channel, paste, and you make a parallel line right here, and you put it at the bottom. So that's the trend channel, rising channel. 45-degree angle of ascent. So you take profit at top of the channel, close the position, pull back, re-enter at support, or stay in the trade until price violates the support, breaks below the support. So ride the wave until the support is broken. Okay? Very important. This is the key. Watch those channels. And those channels, remember, this is very important. Remember what I'm saying right now. Those channels have a commonality. They have a 45-degree angle of ascent. So you can almost, for every trade you make, unless it's a momentum, the channel, the angle of ascent changes to 60. It speeds up. Like here, this goes almost like vertical. So this is a momentum. Okay? Break fast, moves fast, lots of volume coming in. Okay? So that's usually excitement. If it happens at the beginning, it's a good indication. There is a momentum coming in, consolidation, and then more volume. If it happens at the end of the trade, at the end of the trend, that's an exhaustion. Example right here. But we're going to see that, we saw that in previous examples, in the live trading examples. So anyway, remember this 45-degree angle of ascent or descent. Now we're talking about buying, so you want to go long, and that's the way you need to trade those currencies. Anything you trade. Once you have a breakout, expect the angle of ascent being a 45-degree. That's the general trend. That's the general direction, an angle of ascent of a rising channel. Unless it's a breakout with momentum, with a lot of volume coming in, then the angle of ascent is 60 degrees, and that's super powerful. Now, from a swing trade point of view, how would you trade this currency? Well, this is how we trade it. This is a breakout. Okay, so if you witness the breakout happening right on this day, this was the place to enter. At the breakout, especially after price moving above the 21 simple day moving average, this gray line, and then this would have been the place to enter. But since we missed it, is it too late to enter? No, it's not. So you change and go inside the hourly chart. And as you see, inside the hourly chart, well, we got all these lines that we drew earlier. Let's clear some of those. Okay. So we have the hourly chart. We are seeing this strong ascending triangle, which is actually making also a channel. Okay, so here we go. Buy a support, sell a resistance, right? Strong rising channel, breakout inside the 1 hour chart. This would have been a great place to enter. 27.18. Let's look inside the daily chart. 27.18. Okay, that would have been here. 27.18. Beautiful. So if you missed here at the 21, you could have entered here, 27.18. Why? Again, 1 hour chart, breakout of this ascending triangle. But right here, 27.18, 27.20, 27.23, something like that. Enter. And then, where do you exit? Well, you have a rising channel. So you enter the breakout and you exit at the top of the channel. So this would have been a nice run from 27.18 to 29.18. 27. Powerful. But if you wanted to stay on the trade longer, which is nothing wrong with that, you go back inside the daily chart again. And this is when things can turn into swing trades. I'm going to close those. A little distractive. Okay. $27.23. Okay, $27.27. All right. So strong support. Okay. So the breakout came right here. Now you want to draw horizontal lines, trend lines. Right there. I'm looking at this channel. The price has been forming. Looking at the lows. There it goes. Yes, look at all those lows where price touched here, 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 almost here, here, and then today the breakout with volume. And I'm gonna remove this. So breakout with volume, powerful. So the breakout with volume, pushing price higher. Daily chart. Here we are, a new day is beginning. 4 p.m. There you go. So if this is your rising channel, make a copy of it. And you have the center of the channel, the mid channel, and the top of the channel. So if you want to let price run, and you're taking obviously a little more risk because you're holding this position overnight, this is a bullish engulfing. Your stop, so when you have a big candle like that, your stop should be, you don't want price to pull back more than half of the size of the candle. So your stop technically should be somewhere around here, 2500, 2550. But we also know that there is a strong support right here at 27.29. So in my book, that will be the area where I don't want price to move below it. I will look at that as an entry opportunity. If I miss this entry today, I look into tomorrow, see if price pulls back at the area and gives me an entry opportunity, because this is a strong support. And then see if it goes higher. So this is the channel. This is a lateral support, and those are the next targets. How did we find those areas of resistance? We found those next targets by looking at the highs on previous bars. So the highs over here, 29.35, and then the highs over here, 31.95, and then the high over here, 37.06, and the high up here, 41.30. So those are your next targets. If you want to hold this position for 3, 4, 5, 10 days, a week, a month, a year, this is all up to you. Those are your targets. And you want to make sure you raise your stop losses as price move above the next resistance, so the resistance becomes support, and you don't want price to move below it, so you raise your stop loss just below that area. Very important. So as this moves up, if it moves up, those are your targets, and you want price to remain above the support right here of 27.39. If you want to take more risks, you lower your support area at 25.90. You look at the highs right here, so this area is a support area. 25.90, 26, or 25.25, anywhere in between these two areas. Because if this is a breakout with volume, which it is, we should expect this to go higher. So if you let your profit run, and you hold the positions for a few days, with the appropriate stop losses, so enter at 28.50, which is the price right now, 28.30. Your stop loss is at 27.39. You're risking $100. So you're risking 1 to make 300, 1,000, 1,300. So as long as the risk-reward ratio is 1, 3, 1, 4, so you're risking 1 to make 4, That's great. If you're risking 1 to make 1, that's not good. Don't do it. Don't trade for that. If you risk $1 or $100 to make $100, that's not worth it. Don't do it. You risk $100 and your profit should be 4 times as much. So looking for a target of 31.90, looking for another target of 37.06. Now those are great targets because those are 3 times as much and 9 times as much. And then 12 times as much. Don't risk 1 to make 1. Your risk-reward ratio needs to be 1 to 3, 1 to 4, or greater. In other words, risk 1 to make 3, 4, or more. See? Very important. Now, in terms of position sizing is very important. It depends if you're trading as a day trader or if you're trading as a swing trader. Okay, so as a day trader, your position size doesn't really matter. Let's put it that way. When you find a trade that matches all the parameters that we discussed, such as consolidation breakout, a breakout that comes with a nice green candle, with volume, like we are seeing here. Again, this is the hourly chart. You should be looking at the 1 minute chart, but this is for simplicity, it's easier to see. So you put at the breakout, you give it all you have. I mean, I don't mean your entire account, but put money in it, because you're not gonna be there overnight. You're just gonna hold it for 20 minutes, half an hour, 2 hours the most. You gotta be watching it though. And make sure you keep your stop loss very tight. Yeah, if price reverses, after the breakout, you want to give a little bit of wiggle room. So if you enter a 6,000 right here, okay, so you put all your 6,000 in here, so you buy 1 coin. Make sure, price won't wipe out your 6,000 by losing $300, $400, $500, okay? So when you enter, you want price to move the direction of your prediction. You have all the conditions in mind. The breakout, the volume, money flow is going up, moving averages are confirming, and especially you see volume coming in, yeah? And price makes higher highs, higher lows, higher highs, higher lows. And the ATMA, it's holding the price up, okay? So this is very, very important. Stay in that trade with that amount of money, okay? And then take profit. Close. When price reaches the resistance, close it all. Take it all. This can cause quite a bit of stress because you're putting quite a bit of money. So the way to reduce the stress is keep your position small at first. Your position small first. So when you are practicing, practice with small positions. Let's say you have an account of $10,000. Risk, or I should say invest $1,000. So you have $1,000 invested in Bitcoin, for example, and the rest 9,000 are cash available for other investment to add or to put it somewhere else. So you invest this 1,000, and you invest this 1,000, and you and then you position your stop losses and your targets. So everything is monitored. If that position is too big, how do you know? Well, you will know because if price is not behaving the way you are expecting, and you start getting very uncomfortable to the point where you sweat, you don't sleep, you have difficulties with your body, your mind, all these troubles caused by the emotions, your position is too big. So make your position size even smaller. The smaller the position, the easier it is to control the emotions that arise from it. So this is a key piece. Don't have too big of a position. Small position is better, especially at first. And then when you get better and better at trading, as a day trader, all the conditions meet your parameters, then give it all you have. So if your position size is 1,000, but for that 10, 15, 20 minutes, give it 2,000, give it 3,000. If you are confident that all the parameters are in place, as we said before, breakout with volume, green candle, either a hammer or a bullish engulfing, and price continues to move higher, and you have a price and you have a target up high that is 3-4 times the risk you're taking. And in that situation, keep your stop loss pretty tight. You don't want price to reverse and wipe you out. Doesn't work, doesn't work. Don't re-enter, don't re-enter, don't re-enter. It doesn't work, walk away from it. Take a walk. In this business, 3 strikes and you're out. So if you try 3 trades and things don't work, walk away. Do it tomorrow. Go back and revisit. Why did you do it? What was your emotional state? What problems did you run into it? And so analyze your trading pattern and learn from it. This is called journaling, very important. So these are things we want to consider when we trade. Very important, analyze position size and the quantity. If you are a swing trader, you have to stick with your position. Don't go over it. In fact, less is better. Because you're going to be holding the position overnight. When you hold the position overnight, you're going to be thinking about it, even if you don't want to think about it. So you know that you have this $1,000 invested in this coin, and you have your stop losses set nice in place. But if you put more than your position size, which is more than what you're comfortable be 2,000, 3,000, 5,000, 10,000, I mean, that's a lot of money. And not for some, it's a lot of money for other people. So this is very personal. If you are not comfortable, don't do it. If you put too much money, you're gonna feel the emotions much stronger when price either moves in the direction of your predictions or against it. And even when it moves in the directions of your prediction, with the excitement, that's when people really get hurt. They keep adding, they put more, they buy more, and then things reverses, and then they get sucked into the emotional spun out. And then when price reverses against them, that's just as bad. I mean, it's worse, but that's just as bad. Because then they keep adding to losing trades, and then all of a sudden, instead of losing 300, they're losing 1,000, 1,500, 2,000. So that's how people wipe out their accounts, and they don't trade again. So learn these very important things. Position sizing and the risk-reward ratio. Calculate your risk-reward ratio. So this is extremely important to practice, to learn, to know, to understand. All right? Okay, Bitcoin Cash and dollar. Let's see. A breakout just occurred. Let me just show you quickly the daily chart. So we're seeing this consolidation. Draw a line. Trend line right through there. To the tops. Breakout occur right here. We have a base. Through there. So this is a pendant breakout or triangle breakout. Okay, now let's go inside the hourly chart first. Here is the breakout with volume. Look at this volume coming in. First we have all small bars as price was consolidating, and then as price pushes through this line, center line, big candle with volume coming in. Look at this, powerful. So this is, if you catch something like this developing, where you might want to wait for a pullback or jump in. You know, the pullback came right here, so we had a pullback right here and here. So this is a consolidation, but look at this consolidation. And here is the breakthrough, follow through right here, 2,709. Continues to move higher. Now we could wait for a pullback or jump in. This doesn't seem like it wants to slow down, because look at the candle right here, this formation, this triangle formation right here. It's an ascending triangle. So the bullish energy is very strong. So we might not get a pullback. You can enter a partial position or a full position. Just be aware that if a pullbacks come, just know how you're gonna react. So this is you don't want to chase trades. So to find where to enter a position, we need to switch into the a shorter time frame. So let's go into the 1 minute chart and see how price is behaving within the 1 minute chart. Look at this acceleration. So let's see if we find a breakout area. So this is the breakout. Look at the volume coming in at the breakout. Look at the power. Look at all those lines. Big bar, and then a pullback occurred right here, and then this would have been a great place to enter. More consolidation as price was holding. Look at this nice narrow line, support line right through there, and then right here another breakout. This is just happened. Get a little closer here. Breakout right here at resistance. This was the breakout right through there, and look at the volume coming in. 1, 2, 3 big bars. Look at this. That was the support. Big bar. 1, 2, flying higher. And now we start seeing more red candles, so this is more red volume bars. So we might be getting a little bit of pullback. Where will price pull back? Well, this is the next area of support. We're seeing something right here. You can also go back from the 1 minute chart, go into the daily chart, and look again. Where is the support? Well, you look at the highs over here. So this is some resistance, and then what are the next logical highs? Pull the cursor down, so we got those bars right here. Let's draw a little line, so we know exactly what we're looking at. Horizontal line. Okay, let's call this the support, because you see this high right here, right here, right here. The closing price right there, the opening price right there. So this is a strong area of resistance that was broken, and now it's support. So let's go back inside the 1 minute chart. And okay, so this is the support we just draw. So price could potentially pull back as far as down here. And you see there's more red candles coming in, and there's more red volume bars. Those are down bars. This is selling, selling, selling. So we could think of, so there's some support right here, and there is support at those moving averages. See, it's coming down. Look at the volume bar coming in. We wait for a pullback. Don't chase the price. Let price come to you. See, we get some support right here. Now, if we get a, first we don't want to try to catch a falling knife. You get cut. So this is what they say. When you start seeing red candles, sell candles with the down bar volumes, don't catch it. Let it come down. Let it stabilize over a support area, which we know it's around here, which probably is going to come in coincidence with the blue line, the 50 simple day moving average. So let it come to you, unless we see a reversal right here, because there is also a little bit of a support right here. You see in this area, price pull back in 28.14, there will be an area. So if this prints a hammer, and then we have a green candle, that's a buy opportunity. But so far, it's not showing. So right now, we just wait for price to move a little lower and find a better enter position. Money stream is going down. Are the bulls there? Is this a potential reversal? It could be. This is our support and needs to hold. Let's see, do we get another nice green volume bar? If we do, then this will be the place to enter. Let's see what it does. We'll wait for the minute to end, to finish. The ATMA needs to hold and the 21 needs to hold. Indecision, Usually when you have a pullback like this comes in 3 waves, 3 consolidated waves, especially after such a big run. You see like the angle of ascent here changed? This was 45 degrees and then it went into 60. This is the excitement and the acceleration where people get so excited they overbuy, things go into overbought, you see right here, and then all of a sudden major reversal. And here is the reversal happening. And there is still indecision, price continues to close below the 8. I'm not seeing big volume bars quite yet, other than on the downside. So here we go. Wave 1, wave 2. This could be a bearish pullback and a reversal. Unless this support right here is strong, in which case we can jump in. Okay, price is moving above the high right here. I'm not getting the vibe of a jump in. Wave 1, wave 2, wave 3. I'm expecting a pullback to come down this way, somewhere around here. Down bar volume. Now if the support right here holds, this could be a place to enter. But if it fails, again, price will roll down and probably test the 34 and then the 50. We'll see. These still look like a bearish pullback. Wave 1, wave 2, wave 3. Making lower highs, 1, 2, 3. Making lower highs. It's a good candle with nice up bar volume. So now you can draw a line, and if price breaks out of this line, okay, so price breaks out of this line, that's a breakout. Okay, modify a little bit. There it goes. You need to see volume. A breakout comes with volume. If there's no volume or smaller, it's a false breakout. So let's see what happens, how this candle is going to close. Now this could just be a triangle, but also flag. So we'll have to see what this does. Volume is moving down. Breakout. Okay, so where's the volume? We need to see volume bars coming in. This is a real breakout. Okay, it's coming in. So this was not a flag. This is the area of consolidation, changing. Strong resistance, down bar. Wave 1, wave 2. making lower high, lower low, lower high, lower low. Okay, so this looks like might want to go lower. Breaking below this support. More sell volume coming in. This looks like wants to go lower. See, this was not a true breakout. It didn't come with volume. Just a little bit. And then the down bar volume, the red bar volume, it's increasing. So this tells us lower. Price will move lower. Pullback. I'm not going to sell this one simply because of this strong momentum. But before I jump in, I need to see more up bar volumes, green volumes. 4-minute pennant. And remember, these consolidations, they changed. You can modify them as you go. And as the consolidation gets narrower and narrower, the pressure increases, the tension increases, and then if we have a breakout above this descending trend line, bullish. A break down below this trend line, support, bearish. Support is holding, but there's more selling than buying. You see all these big red candles? See more red than green, where here was more green. Look at the volume in this last half an hour. Okay, more green bars. Now we need to see some nice volume coming in. Nice green volume coming in. Is it a breakout? Volume increasing a little bit, money flow going up. Looks like this wants to go. Volume is coming. Now we need to watch this area. If price breaks out of the highs over here with volume, jump in. You can enter half position here, since this is a breakout and we see more volume coming in. Okay, here we go. Volume is coming. Volume is coming. Moving above the moving average right there. Can we get a push through? I like this bar. This is a good indication that something is shifting. See, we need follow-through movement. We need follow-through volume and price increase. Do we get a breakout? I think we will. Is it coming? Price certainly wants to go higher. I mean, look at the... See, price has been making higher lows right through here, right through here. This is a strong support. This is a key area. If we get a breakout of here, price will run. If it fails, we could get a double top. 1, 2. Very important. What do you know? Well, if it breaks out with volume, you jump in. If it doesn't break out with volume, and price pulls back, and it breaks below this line right here, which is a strong support, then you exit. Strong resistance. You see, if there was a breakout, you needed the follow through. It's not getting the follow through. It's still there. The pressure is still there. So this is now through there. This is an ascending triangle. Looks like it wants to go, but we don't want to anticipate. If it does break out though, jump in. You see we didn't get the volume confirmation on the following bar. So this might still need to consolidate a little more. I like this bar though. This is indication. This is a very positive indication. The more volume, more buying volume has jumped in. And where did it jump in? Right here at 28.45. Are we getting the next push? I think it's coming. I think it's coming. Okay, volume bar, give us more volume bar. OBV moving up. Here it comes, here it comes. Enter. This is the breakout. And here's the volume coming in. Price is moving higher. Comes the volume. That's your breakout. Here's the volume. Beautiful. See volume bar coming in, powerful. Now this could get a pullback, test the support, another opportunity to enter. But if you enter a breakout, like I mentioned, now you have to find where will you exit, okay? So we gotta find the area of resistance. So you come back inside on the daily chart. Alright, so we have some resistance right there at 29.35. We have a resistance there. I'm looking at those highs at 31.95. That would be nice. And then we have some resistance there at 37.06. And then more resistance right there at 41.30. Okay, let's come back inside the 1 minute chart. So when price reaches 29.30, you can take your profit. See the volume coming in, more green bars, look at that. Going up. Going higher and higher. After the breakout comes, you want to see more volume coming in, because people get excited. And you see small pullbacks for re-entry opportunity. But price needs to make lower highs and lower lows. Just like it's doing right now. Volume continues to come in. Money stream is pointing up. Next target, 29.35. Approaching 2900. Even numbers are areas of natural resistance and support. So we should expect a little bit of consolidation around the 2900 level, maybe even a little bit of a sell-off. What you don't want to see, okay, 2900 reached. What you don't want to see is price pulling back too much and moving down this area. This is your new support, very important. Okay, it's breaking above it. As I said, look at the volume coming in. The bulls are there. Price is making higher highs and higher lows. 29.6. So if we had this measure, this movement right here, 29.13, we said 35. So this is a movement that went from 27.46, from 27.46 to 28.57. That's 100 points, more or less. So then you measure from here, 28.44 to another 100 points. That would be 29.44, 29.30, 29.40, 29.50, somewhere around that. So look at this huge big bar volume. The buying is getting quite exciting. People are jumping in on both feet. It's happening. So if you enter a position right here, when you day trade, just give it all you have. 2, 3, 4, 5 coins. Because you know you're gonna get in just for a short period, just a few minutes. So you enter here, 28.61. Okay, so this is our resistance. Remember, this is our resistance. Take the profit there. raise your stop losses, bring the stop loss higher, and put it below the previous day low. Now you don't want price to move below 19.15, 29.15. Don't want it lower than that. Take the profit, if maybe close half position, and then keep the other half open. Now this will go much higher, but why leave money on the table? This is on a momentum run. Take the profit when it reaches target, which is now 29.35 or somewhere around that. It's now 29.19. Getting pretty close. We're not seeing the sell bars, but hey, here it comes. Coming in a little bit. You still make, oh, here it goes, out. Okay, so you see that's the sell profit. Okay, yep. So you see you gotta take the profit when you can, not when you have to, because now these scares, red bar, bullish, bearish engulfing, these will move lower. Now this will give us another opportunity to re-enter. So you exit with the excitement. You see these big bars of excitement? Close the position, and then wait for a pullback, wait for a profitable re-entry. Where will it be? And then wait for a pullback, wait for a profitable re-entry. Where will it be? Where we draw other lines. Now we have this trend channel right here. So I'm thinking price will most likely come down. Now this is very steep. This is something falling, so you don't want to try to catch something falling. You want it to stabilize. Again, we have the support right here. Price could come down again and test the support right here. 28.50. This was the breakout area. It is testing. It's retesting. Look at the people are getting freaked out. Sell, just like here. Buy. Sell, scared. Bottom of the channel. Buy partial position. And if price resumes the trend inside the channel, add positions. So now this area needs to hold. If it doesn't, it will roll down. There's also support right here. This support line right here. So we have three supports. 1, 2, and 3. Here we go. Little hammer. Yep, that would be. And volume coming in. Green volume. Beautiful. Buy back. Add the positions. This is strong support. This needs to hold. Reposition. Checking on those lows right here. Now it's forming a bullish engulfing. Here we go. Green volume. Is this the buy signal? Let's wait for the bar to finish, to be complete. If this ends on a green candle like that, above those supports and above the 21 simple day moving average, it's a buy signal. And I think it is. Look at this volume right here. Money stream is coming up, big volume bar, and green candle. It's very steep. Look at the steep descent. After a pullback of this dimension, it could be wave 1, wave 2, wave 3. We don't want obviously that to happen, but it could move this direction, testing the supports, either this one or this one again. And definitely this one. So now we have to lower it because, well, let's keep it here. This is a good place too. But this was the important breakout, so we'll keep it there. Okay, so we're getting wave 1, wave 2, wave 3. A little bit of a pullback. Again, I will expect price to test again this support right here and this support right here and possibly this support down here. Consolidating. Let's see. Are there other lines we need to connect to see if there is some areas of support and resistance? It's not moving any lower, and if it is, it will test this line right here and then this line right here and then this line down here. Because it will move lower. It will test the 50 simple day moving average, the blue line, and then it will roll over. Wave 1, wave 2, wave 3. Sometimes the consolidation will form a wedge and will take you further down below previous supports. So what we see now, we have a strong resistance right there. Strong resistance. Now wave 1, wave 2, wave 3 will be a flag. Very important area. This is a very important area, key area. This needs to hold. 1, 2. Testing the 50. Testing the support. This is very important. It's breaking lower. Careful. Wave 1, wave 2, wave 3. Careful, it's breaking lower. Yep, here comes the wave 3. Usually after a big bullish move, you get a consolidation of 3 corrective waves. 1, 2, 3. Now this broke the 50, not like that. Here is the next area. So price, I'm looking at those lows. Could come as far down as here. Okay? Looking at those lows right here. And this is the flag. Or it might be making a pendant. This support was taken out. So now we're looking for a re-entry position, but you need to see the volume. You need to see the volume. Wave 1, wave 2, wave 3. Okay, here it is. Is this a buy opportunity? Well, you don't want to jump in right away. You want to wait for a breakout. Because this is now, let's go inside the daily chart. Daily chart looks very strong. Still big bullish candle, bullish engulfing, with a breakout, powerful. But sometimes you get a big candle like this and then you get a reversal inside the candle. So let's see the 1 hour chart. Okay, 1 hour chart. This looks like one of those. 1, 2, 3, 4. So previously, price did the same thing. Big run, little move. Big run, little move. Big run, 2 big runs, and now it's got a little move. So if this little move looks like it's going to end up like one of those, this is an hour. Each bar is 1 hour. So this was today, morning. At the breakout, look at the volume coming in at the breakout. If you had witnessed this breakout right here, and you enter at some point around here, 2450, 2500, or even above those highs of previous hour's highs, 2539, these would have been all great places to enter. And then look, volume can continue to come higher. On this bar did not close great, pull back, and then it continued to move higher. But look, now in the 1 hour chart, you want to look at the ATMA. See, the price continues to trend above the ATMA. So that's the indication of stay in the trade. Stay in the trade until price closes below it. And then you have to know what are the previous supports. Well, previous support is here, 25.30, and then here, 26.69, and then here, 27.69. Okay, price is retracing quite a bit. It could be making something like this, because at one point this bar was the same, and then pull back. But you don't want it to close like that. If this was the end of the hour, this would have been dangerous. Let's go back inside the 1 minute chart. Okay, so the resistance, the support was taken out right here. People are freaking out, selling like crazy. And now we have the next support. Now this is the support that we drew earlier in the 1 minute daily chart. It's the support right here of all these previous highs. 1, 2, 3. Support right here, 5, low in there. So this is a key area. This area needs to hold. And I have the feeling it will hold. 1 minute chart. So don't try to catch a falling knife, okay? Remember that sentence. Now we're gonna draw a new areas of resistance and support. So because the area fell, now we wanna see where is the next area of support. We got these big lines right there. So if the breakout came, Look at the breakout right here with the volume. I mean, who would want to buy this? Breakout with volume. That's all you want. And price ran from 27.21 all the way up to our target 29.35. Powerful. Okay, now let's come back inside. Look at this. Okay, so now we're getting a bounce because this is your support. Volume is coming in. Is this a good place to enter? Well, down here would have been a good place to enter, 27.85, especially here. This was the support, 27.85, and then things, okay, price has moved above the support again, this secondary support right here, and it's inside the, this is more of a flag, yeah, side of a flag. Now wait for price to test the top of the channel, and if you see a breakout with volume, enter. See, money stream came all the way down to oversold, and this was the buy opportunity, right in there. 27.90, strong support, buyback opportunity. 1 hour chart. Remember a few minutes ago, this was all red. A few minutes ago, when we looked at the 1 hour chart, this candle was all red. Now look at this massive pullback. Because support held. This was your support. Now it's testing the top of the flag. This is forming a new consolidation. So what is new consolidation gonna do? This is your strong support. This needs to hold. Very important. And then we got strong resistance up here at 28.58, which was the breakout area. Got more volume coming in. You see, with these currencies, they move quite fast. You gotta take your profit when you have the opportunity, not when you freak out and you sell, panicking. That's when you lose your capitals. Enter the position, a breakout. When you see volume coming in, jump in, add good positions. See, this is not going anywhere. See, these volumes is like, this will probably move lower. Yeah, not gonna go anywhere. Strong resistance. Will support hold? I don't know. So far I'm not seeing the buying. It's just a consolidation. Okay, it's pausing. They're thinking, computers are communicating, and usually when that happens, it's gonna be happening a big move. If we get a breakout out of here and volume comes in big bars, let's jump in. Okay, big volume bar, green one, moving stream moving up, came down to oversold, bounce up, pull back, made a higher low here, in here, divergence. It could. It's a breakout with volume on a green candle like that, above those supports and above the moving average. it's a buy signal. And I think it is. Look at this volume right here. Money stream is coming up, big volume bar, and green candle. Buy. You can always enter half position and add to it if you get confident and you see volume coming in. Yep, this wants to go higher. So this might take a little bit of time to fill in this area and then go higher. Look, we got resistance right here. And look at this. This could be a head and shoulder. Shoulder, head, and shoulder. So this could move lower. This is very important. This is a pattern we didn't describe, but it's a very common pattern. High, pull back, higher high, pull back, and then a move below the previous high, same area of resistance. And if we get a breakout here, this is great. If we don't get a breakout here, this will roll down. So very careful. Volume is coming in. That's positive. The 50 is strong. This resistance is strong. If we get a breakout out of here and volume comes in big bars, then yes, jump in. Okay, we just moved above the 50, testing this area of support, this area of resistance. Are we breaking? Don't anticipate. Now, if you get a breakout with volume, add to the position. If price fails to break out and rolls down, close the position. Okay, trying to break out. It's a coming, it's a coming. Okay, volume bars are green. Buy, buy, buy. Price continues to close above the ATMA. Looking good. I look at that more on an hourly chart and a daily chart, not so much on the 1 minute chart, but it is part of the analysis. So I'd like to remind that. Going up, looking good. Now again, we had the resistance of 2900. Okay, approaching 2900. So at that level, you can close the position because this is already a nice run from 28 to 29. That's 100 points right there. Or you can raise your stop loss to the previous support, 28.54, 57, but then you'll be losing all this money. So look, price is getting into the overbought conditions. This will be a good place to exit the trade. So because just broke out the 2900 resistance area, let it run a little higher. Make sure place a stop loss just few pennies below the 28.90. So below the 2900 area. 28.90. Okay, here comes a little red candle. So you don't want this to make a big red candle. Okay, so it's a little bit like that, it's okay. Money stream is flowing down, it's starting to roll down. Okay, so here is where, yeah, you can take your profit. Or make sure price does not close below the ATMA. This is your support, 28.90. 28.90. If this holds, we'll go higher. But you see volume bars coming in, sell. Money stream moving down, sell. So be careful with this one. If this low holds, 28.90, stay in the trade, which is possible that he will hold. But if he doesn't, close the position. And the stop loss will do it automatically. Now the bar today, this minute bar just opened below it. See if this area holds. 29. 29 is to hold. If it does, we are looking at 29.35. This seems still very strong. We are not getting any large sell signal in terms of candlestick bars. The volume is still decent. This was just one bar of selling. So I feel like we're going to get up to the 29.35. $29.19. So we are approaching a previous resistance where price rolled down. So this was here 29.25, okay? Just, let's see, 29.26. It's getting there, 23. Get ready. If he breaks out of the area, he will test the 29.35, which was our next target. And after that, either he will run to the upside or break down. Because this had such a huge run of 100 points already, this is wise to take profit right here. You don't want this to slide back and give everything back. So sell into the excitement. Buy a support, sell a resistance. Here you go, break out, break out, break out, sell. Take the profit, put it in your pocket. If price continues to go higher, you can always jump back in. Don't let this slide away from you. Take the money, put it in your pocket. This is a strong area. Volume is coming in. You gotta make a decision. Do you want to stay or do you want to close? If you enter here, you want to close. If price breaks out of this resistance, 29.35, jump back in or add positions. Strong area, strong resistance. But remember, a breakout needs to be followed by large volume bars. Right here, this needs to be large volume bars. Strong resistance. Okay, so big bar. This is red. If it closes red, you need to be out of this. If it closes green, yeah, pulling back a little bit. Let's see, this is consolidated. This is a strong resistance. Now we have resistance here and support here. This is a support of 29.18. Testing the moving average, the ATMA. See, you get more selling coming in. Careful. This could roll over. You did it before here. Why wouldn't I do it again? Well, can happen. And it did. That's why you gotta take profit at resistance. Okay, so here we are in TradingView. Let's do a quick entering of an order. So you can simply click here on either buy or sell. And here you got the quantity, 1 coin, 2 coin, 3 coin, 300 coin, whatever you have, whatever you can. We keep the quantity the same for now, so 1. And if you want to buy, you click on buy. If you want to sell, you click on sell. So let's do buy. Why? Simply because this is in an uptrend. We had the flag broke out, and a little bit of, well, a massive run, a pullback, the 50 is holding, and then we had another run, price reaching the top of this rising channel. Now it's at the bottom of the rising channel, and now it seems like price is testing to break above this moving average. Let's enter. There it goes, executed. And then you can always check your orders right here. Paper trading, open up. Here it is. We bought 137, there's zero profit yet. This thing is just cooking for now. So you click here, paper trading, to close. To set stop losses and targets, you have to do it slightly different. I haven't figured out the way quite yet to add it after you enter an order. So in order to enter what's called a bracket order, which is a place where you set you enter the trade and then you set a stop loss and a target. You have to do it all in one shot. So let's close this for now. So this is how you close your position. Okay, this is done. This is your confirmation, placed and executed. Done. Okay, so now we have no position open. So to enter a trade, you right click and you do here, trading. Okay, trading, buy. Okay, so we want to buy at 134, the current price 58, that's good. And then we want to set a stop loss. We'll go below here, 1252, price 1252. Well, we don't want to take such a big risk, so maybe we'll do below here. Okay, we'll go for 1310. 1310, and then target somewhere up here, we'll make it for 1500. Target price 15. Let's make it 1480. And with this we have eraser. 143. Let's go. Buy. Well, we gotta click down here. Buy. Okay. Placed. Execute. Stop. Placed. Target. Well, let's see what we got. Okay, so we're in at 1343. The target. We need to change this. This is not correct. 5. Okay, it's been modified, and then we got a stop loss right here. Cool. So you can always modify your orders after you enter the bracket, which is entry and the 2 exit strategy, the target and the stop loss. Then you can click here and you can modify it. Now that we are in, we can go and take a better look at the whole chart. So if we, if price runs and breaks out of here, so we have a resistance right up here at 1420. This will be the next obvious place to take a profit. But I believe this is going to run all the way up to the top of the channel. So we can just let it run its course and see how far it goes. You can always modify and raise your stop loss if price reverses. Right now the stop loss is below this low right here at 1310. Keep an eye on it. Okay, so let's check back on our trade. Well, price is about to reach some resistance right here. We got the top up here and we got the top up here. The good news, many good news, is price has been able to break through the moving averages. Right here, the 50, especially the blue line, that's the 50, and the 8 is trailing. Right behind it, you see just now, I pulled back a little bit, tested this low right here at 1348, held, and it keeps moving up. So this price seems like it's going to make higher high, higher lows. Let's go inside the 1 minute chart, see what that looks like. Yeah, it's trending nicely. Very good. The breakout came out here from this line, the 1 minute chart. You see this pennant formation or triangle formation, whatever you want to call it. Pennant will be longer. This is a triangle formation. Breakout with volume. Look at this. See, nice. Boom. Up. So now again, it's approaching some resistance. So we could expect a pullback. Back to the hourly chart. However, I don't think a pullback is going to be a major pullback. As long as it stays above the 8 EMA, I'm happy with that, and the 50 definitely. So let's take a quick look at the paper trading, the account. So we're up $35, it's very good, and our stop loss is 13.10. We could modify this, bring it a little higher, so our stop is down here. We have a support at this level. Let's close this just to make it easier to see. There is a support up here. So we could raise the stop loss, 1332. We don't want to keep the stop too tight in case there is a major reversal and then price just goes down and then moves up. So I would suggest keep it there for now. I mean, if you had a large gain in there, like a couple of $100, $500, $1,000, cash it in. But since we enter, we are doing this as a swing trade, by the way. So we're going to be in this position for several hours or up to a few days. So as long as price maintains this course of direction and stays above the 8 EMA, I'm happy with that. So we'll check back later. We'll keep things as they are. But so far looks good. If price breaks out of this resistance, you can actually add positions because this seems like wants to go higher. For now, we keep things simple. We keep it one quantity. That means $1,300.78, 1378. So that's kind of a good position. If you have like $10,000 account, this is a good position to have when you swing trade. So let's stick to this plan. Our target is still first up here. We want price to break above here the 1418 level, and if it breaks above it, maybe with a little consolidation and then a big push, we're looking at 15, okay? So that would be a nice ride. We enter at 1344, 43. We have a stop loss at 1310. So we're risking 33 points to make 150 points. So that's more than a risk-reward ratio of 1 to 4. It's actually 1 to 5. So that's a very good if we reach that level. But still a very, very decent ride up to this point. And let's see if we can make it up here to 1420 and hopefully 1500. Let's keep an eye. Okay, so you see an hour later we have this big candle formation. This is a bearish engulfing. Bearish engulfing is a signal, is a sell signal. So if we had kept looking at the chart and we see that this candle is starting to form the resistance at 1382, it's actually resistance. First of all, close the position. And if an hour later you see this red candle forming, this is actually a great place to enter a short position. However, we were looking at the chart, we let this thing play out, so now we're left with this sell signal, and we're losing $15, so we could close the position, but we have already parameters in place, we have stop losses, so let's just play it out, again for the sake of this exercise, and let's see what happens moving forward. So let's take a look at the 1 minute chart and see the pullback, see the formation of this red candle within the 1 minute chart. See what we could have done if we were watching the formation of it during the shorter time frame, 1 minute chart. Let's take a look at that. So looking at the 1 minute chart, that's the pullback. You see, that's why you gotta take profit when you have it. Price is a resistance. Close the position and take the profit. You see right here, and then a few minutes later, price close below the 50 simple day moving average and move down, and you saw volume start coming in. Look at this bar right here, and then crashed. A little pullback and then more price down. And we haven't got stopped out yet, so we could still get a bounce. However, at this point, I don't think we get it. It looks very bad. Looks like price wants to go lower. Price continue to close below the 50. A few areas, but you know. So this, I think, is gonna get lower. We will see. We're not gonna move the stop loss. We keep it where it is. You gotta take profit when you have it. So the place to close the position was up there at 1360. That would have been a place to take the profit. Now, you know, price will probably come down and test yeah, this support down here at 1269. Well, let's stay in and see what in a little bit we find out. Okay, we're getting a little bit of a bounce. Price has moved above the support. Still testing the 50. You see here in the 1 hour chart, price is still testing the 50. So that's a major resistance. Volume is coming in, but not much. So let's look at the 1 minute. Okay, so that's a huge volume bar right there, sell. We had a bounce, and well, we have a support right here at 1310, that right there where we have a stop loss. So if this area of 1336 holds, this could try to get higher, but I'm concerned about the 1 hour chart, the 50 simple day moving average. Let's look here at the 15 minutes chart. Price, yeah, I see way too many upper shadows, sell. And here we go back at the 1 hour, this is very clear. The daily is not telling us much other than it's resting right at the support that we have drawn. Back to the hour, yeah, this is the chart that tells us the most. The 50, it's holding the price down. I think this will get lower. Okay, that's where we spotted the sell-off earlier today. This is the consolidation. We let this thing run overnight, and that's exactly what happened. The stop loss got triggered, and we were out. So you have to have your stop losses in place. And again, we could have closed the position earlier. We didn't. This was just a test to see how those things work. And stop loss got triggered, position got closed, and we were out with a minor loss. Now, is this an opportunity to go shorter? This looks like wants to go much lower. So let's look at the hourly chart. Yes, now prices move below all the moving averages and the price is trending below the rising channel. So this area, the bottom of the channel, it's gonna act as resistance. I think this is a good place. Not quite yet, but this could be a place to go short. So let's get ready and see if we can short this currency. Okay, so here we go. Yes, so we had this sideways consolidation, moving average and moving down. We have a resistance at 1272. Price is not able to move above it, and let's sell. Let's enter a short position. But before we do that, let's draw some horizontal lines, see how far down this price could go. So we have support here at 1120. And where else? Price could come as far down as down here at 1000, 1010 maybe. Anywhere else? Yeah, well, down here. Let's see if we can draw another line. Looking at those highs right there, 1874. I don't think it's gonna get that down. Let's be maybe a little higher. Yeah, 1930, 937. Okay, that's another one. All right, so let's see. Right now it's 1229. That's right where we sell it. So let's see if we can enter a short position. First, let's look at the 15-minute chart just to confirm our assessment. Yeah, definitely this was to go lower. Yeah, this resistance, it's very strong. And look at the volume increase, more sell-off. Look at the daily. What does the daily look like? Yeah, more selling. Prices moved below the ATMA. We have a support trend line right there. Let's see. But yeah, got violated. All those lows, and price opened below it and moved down. So multiple confirmation that tells us that this wants to go lower. Let's open a sell order. Okay, the stop and the target. Our target, let's do 1122. Be reasonable. We could do 1000, but let's take the first one. And the stop, okay, let's do 1250. Sell. The order was placed. And executed. Here we go. We are in. We got all our targets and stop losses in place. Go back to the hourly chart. So the stop, let's bring the stop a little higher. Now remember, this is you're going shorter, so your stop needs to be above the current price. So let's change it to, let's see, $75. Modified. The profit areas looks good. So we have a good risk reward ratio. We are risking, let's see, right now we are at 12. We got in at 12.29. For simplicity, 12.30. And our stop loss is 12.75. So we're risking 45 cents to make $1. So that's not the best the best scenario. Ideally will be 1,000, and so move the target, profit target down to 1,000, and I think it's gonna get there. But you know, I'm not gonna be looking at this right now, and we gotta make for the profit we lost the previous trade. So let's lock something in. So let's go for this one. You see, this is a risk area and this is a reward. That looks decent from this point of view. Listen, you can always modify the stop loss, and I think price can even get lower. Yeah, I think this can do it. Well, we're not gonna take a chance. We took a chance earlier, we lost the opportunity. Now we gotta take some profit and see what happens moving forward. Alright, just as we planned, price came down, and guess what? It reached our first target and came very close to our second target, 1,000. Pretty close. 11, 1, 10, 10, 10, 10. And then got a bounce, and now this looks like wants to go even further. Yeah, our position got automatically closed when price reached the target. Let's look at the 15-minute chart. 15-minute chart. Yeah, we're getting a bounce. But there's more volume. And this looks like a bear flag. Yep, now 1120 is resistance. Let's see the daily chart. Got a bounce. Price came down to the support, the withdraw, and the 21 simple the moving average. Now 1120 is barely holding, not really. And money stream is moving down. This wants to go lower. Well, we made some profit, so very happy about that. Now, as I said, checking back a few days later, so this is the day that we just described, and we exited 1120. We could have gone all the way down to 1,000, but then look at the day. Price came this is this day we just analyzed. Price came all the way down to 850. Look at this, crazy. So price did continue to move lower. The following day there was a lower opening, like right here, like right below the previous day close. Price came up, tested the ATMA, and then came down even lower, below the 50, and testing the support right here. We got some support right here. And then got a bounce. Here the 34 held support, got a bounce. We got a little bit of a bear pullback, and now continue to move lower. You see, as long as price stays below the ATMA, this means wants to go lower. Right now, seems to have found some support, and the support in this case is the 34 EMA. You see, look at the 34 EMA. It's holding. Every time price is closing above it, then good to go. And this is where we are seeing the formation of a hammer and a bullish engulfing. So if this price were to stay where it is and start move higher, this is the indication that the reversal is over, that the pullback is over, and price is ready to move higher. We shall see. Coiniji. This is another trading platform that one of the students brought it to my attention. It's actually a really good trading platform for cryptocurrencies. There's a lot of currencies you can trade. All the exchanges are there, and it uses TradingView API. So very similar charting with way more options. So highly recommended to look at it and to check it out. It's a very good alternative.